We've seen on the CV side of things as well. Citi has mentioned that high single-digit growth is something to watch in FY27, and they're targeting a 40% market share, which is compared to almost 35% in FY26. So growth expansion is there, and CV's 2 to 4% spends on R&D will be continuing at this point of time.
No, absolutely, and thank you so much, Puneet, for joining us with that entire update coming in. So that's also one counter to really watch out for. But in terms of what else you should watch out for, keep your eye on the sky as well, because the financial capital, that is Mumbai, has received heavy overnight rainfall as the monsoon finally set in. Now, with heavy rain continuing across parts of the Mumbai metropolitan region, you do have the IMD, in fact, issuing a red alert for Mumbai and Palghar at 4 a.m. on Wednesday, valid for 3 hours, warning of thunderstorms, lightning, to very intense rainfall as well, and winds of close to 40 to 60 kilometers per hour as well. So that's something that they're watching out for. The southwest monsoon really has reached Mumbai yesterday, 13 days after its normal onset date, bringing relief from the sweltering heat. In a release, you do have the IMD, in fact, saying that the southwest monsoon has further advanced into the remaining parts of Central Arabian Sea, some more parts of Maharashtra, including Mumbai, remaining parts of Telangana, and Odisha, some parts of Chhattisgarh, Jharkhand, and Bihar. So the delay when it comes to the monsoon onset is something that we were really looking at very closely. And some of the forecasts in terms of the long period average is also something that we were looking at. Speaking at the BRICS National Security Advisors meeting, let's also get in some commentary coming in from there, because you do have NSA Ajit Doval, who's also flagged the security risks that AI poses. Let's go across and listen in to that bit of commentary before we wrap.
Non-traditional threats have transcended national borders and have developed defeat systems against conventional responses. Innovative, disruptive technologies, more camouflaged variants of terrorism, cyber threats, in a world which is getting increasingly digitized, they all constitute an important threats for us.
Other than that, some key commentary coming in on the cyber risks. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open, right here on NDTV Profit with me, Neeraj Shah, my colleagues Alex, Matthew and Hiral Daria. And guys, 2 or 3 key things aside of all the Trump commentary that has come in. One, that Asia is not looking as bad as it did yesterday. In fact, smelling like roses compared to what it looked like yesterday. So a bit of a bounce in Samsung, SK Hynix, Kospi, etc. And oil staying lower. So I think in some sense, a perfect cocktail for a bull to be happy about this morning.
Yeah, and I think more than anything else, and it'll be evident from what we say in the recap for what has happened around the globe, it is the chip stocks that have gotten sold into primarily, right? And the AI plays that have gotten affected.
Yesterday.
Yeah, and so therefore from, this morning, but I think from our perspective, you don't need to worry about that. Right.
We don't about that, but I think IT as a play continues to trade under pressure. I think that's something we need to watch out for, because the global sell-off in terms of IT has not stopped in the US markets as well.
Yeah.
That continues in terms of India
as well, absolutely. Yeah, let's get you up to speed with everything that's happened. Some uncertainty persists about the absolute fine points of the Iran resolution, because US President Donald Trump has said that Iran has agreed to nuclear inspections indefinitely, in his words, to infinity, and Tehran has reportedly said that no such concessions have been made. By the way, important update politically from the perspective of Donald Trump and his office. The US Senate has backed legislation directing the halt of US military action against Iran. Now, this is mostly symbolic, but it is also a message to Donald Trump that says that even the Senate, which is controlled by the Republicans, has actually voted in favor to the extent of 50 to 48 of the war powers resolution, which essentially means that they voted against the action, military action or continued military action in Iran. 4 Republicans have backed Democrats in backing that resolution. Domestic support, therefore, for the war in Iran has waned quite considerably. Now, what happened and what we were speaking about just a short while back, Wall Street dropped on account of sharp losses in semiconductor stocks. Concerns are rising about debt-funded AI spending, and also in that context, a tightening Fed which would raise the cost of debt. The Dow has dropped as much as 0.1%, so it wasn't too much damage there. But the S&P 500 dropped 1.4%, the tech-heavy Nasdaq dropping 2.2%. But take a look at the Philadelphia SE Semiconductor Index. That index fell as much as 8% in trade today, and of course Nvidia closing with cuts of 4%. Selling in chip stocks followed a 12% drop in Samsung and SK Hynix yesterday. Remember, if you were following NDTV Profit, you would know that the Kospi in South Korea had to halt trading for a short while, and it ended with cuts of nearly 10%. Basically, it hit a circuit. Micron earnings later today will be eyed very closely, because that will give you a sense of whether the earnings are supporting this massive up move that you've seen in tech stocks. Neeraj also alluded to this. Oil is cooling. Brent crude has now fallen by over 40% from the Iran war peak, and Brent crude in fact has closed at the lowest point since the conflict began. Asia, at least in the early risers, there you go. So that's Brent. It's currently at 76.7. Mixed is what I saw earlier today, and that continues to be the case. The Nikkei 225 down just about 0.2%, similar for Shanghai, and the Hang Seng trading just about flat. Let's listen in to some of what Donald Trump said, among various other things, on Iran.
Iran's been great. I mean, you know, if Iran's reasonable, if they're smart, otherwise we'll have to finish the job. Yesterday, 19 million barrels of oil flowed out of the Strait of Hormuz, a very beautiful place. You've never seen anything like that. It's called an oil gush, and most importantly, they did it for this reason, 99% for this. Iran will never have a nuclear weapon, and they've agreed to that. Now we're leaving Iran with no Navy, no Air Force, no anti-aircraft, no missile capability, no nuclear program. We're leaving them without any nuclear capacity, and they've agreed to that. and we're getting along quite well.
Okay, I'm getting along quite well, but there are still some questions that are unanswered. It essentially has to do with control over the Strait of Hormuz. U.S. Secretary of State Marco Rubio making it clear that no nation can control or charge passage in international waters. Here, listen in.
Well, that's the law. It's an international waterway. No country is allowed to charge tolls or fees on an international waterway. That's existing international law. That's the way it is in international waterways all over the world.
Okay, so that's what the administration in the US and their stance is. Tim Waterer, Chief Market Analyst, KCM Trade, joining us this morning. Tim, thanks so much for taking the time. Your initial thoughts on the way that risk assets have moved in the very recent past? Some might call it a bit of profit taking that has been coming for some time. Would you see it as that?
Nice to be with you. Yes, I certainly think profit taking was one of the reasons we did see a sell-off. You mentioned the Kospi and its sharp move down yesterday. So I think it's not surprising that it happened on the back of that record that was set recently. The Nikkei, same sort of thing there. We've also seen US indices notching up record highs this year, even with everything that's going on in the world on the geopolitical stage and what we've seen in terms of high oil prices. Yes, they've come down now. So yeah, profit taking to an extent. I think every now and then we see the market start to ask a few more questions about tech sector valuations. That popped up again this week. We're seeing a bit of a bounce back so far. Let's see if that remains the case, because I think what generally happens is tech sector gets sold off, markets reassess things and think, well, where am I going to get the best yield, best returns moving forward? And they generally tend to move back in the direction of the tech sector. Let's see if that plays out again this time round. But yeah, look, we've got lower oil prices. I think that'll continue to help sentiment, even though the bond market doesn't seem to have got the message yet, with yields still pretty high in treasuries right now.
Right. Tim, good morning. This is Hiral on this side. Taking cues from there, if you have to look at what's happening to the dollar, good amount of strength over there. You see the dollar index, which is at a 13-month high. You're above levels of, 101. Now, do you see a potential, for a Fed rate hike from here on, in terms of it's getting fast-tracked? And what are the parameters that you would be tracking to actually ascertain that? Because apart from energy, a lot of other things that everyone should be watching out for.
That's right. The dollar index riding high, as you mentioned, now trading above the 101 level, very much fueled by that pivot we've seen this year when we entered 2026 expecting a rate cut from the Fed. Now it's flipped completely to expecting rate hikes, looking potentially to occur in Q3 or Q4 this year. US inflation running hot at above 4%. Let's see how this week the macro data picture plays out. We'll get a read on the core PCE, the Fed's favoured inflation gauge. Look, if we saw another upside beat there, potentially we could see a further leg higher in the dollar and also a move north by treasury yields as well. And that could test the quite resilient risk market sentiment we've seen so far this year. So yeah, very much a story of interest rates. We had a hawkish sounding Fed new chairman last week. I'm not sure if that was what Donald Trump was expecting when he put him in the top job there at the FOMC, but that certainly fueled the dollar higher. And yeah, certainly oil prices that had driven the dollar higher pretty much during Q2 this year. But now the dollar's finding its own strength now that we could have this inflation legacy of the US-Iran conflict, even though we are in this period of de-escalation right now.
Tim, because the oil prices have come off, the markets which were beaten down because of the rising oil prices, do they provide an opportunity if indeed what happened yesterday to the chip stocks, albeit it happened because of a very specific reason in Korea, but if it were to happen again, could the oil battered markets of the last 3 months provide an opportunity for global money?
Yes, I think so. If you look at the big energy importers who have been left out in the lurch a little bit, then I think certainly seeing Brent right now at sub $80, it's much more attractive to enter into those energy importing markets compared to when Brent was at $100 just a month or so ago. So yes, I think there is a potential there for a bounce back for those markets. I guess the big question is, does it stay here? I don't think, it's certainly not ironclad. I don't think this this agreement we have between the US and Iran, I don't think they're still seeing eye to eye on what normalisation will look like in terms of the Strait of Hormuz. So yes, oil down, but I still think cautiously so. And I think until we do see traffic numbers basically back above 100 in terms of shipping movements per day in the Strait of Hormuz to give the market some comfort, I think that could delay a return to pre-war crude prices. So yes, those markets who were left out in the lurch earlier in the year could get a move higher, but I think pre-war crude could be the trigger that could see money flowing into those markets more so.
So that's what we should be watching out for. Thank you, Tim, so much for joining us. Always a pleasure to speak to you. So pre-war crude prices could be one of the key triggers that one should be watching out for to take a cue that money could start flowing back into those emerging markets as well. But in terms of overnight trade, or I would say yesterday's session, a very interesting day of trade, because if you see in terms of what happened, that selling pressure intensified in that last hour. Your benchmark indices witnessed broad-based selling, and you closed near the day's lowest levels after that sharp decline in the second half of the trading session. Overall, if you talk about the market sentiment as well, absolutely weak is what you would say. And this was mainly on the back of the negative global cues, because your Asian markets were lower in terms of closing. US futures were also indicating a negative opening, and Europe was trading weak. Overall, you've seen that weakness that has continued, and profit booking in AI-related technology stocks is what weighed in as well. Nifty closed with cuts of almost 1.2%. We settled somewhere around the 23,000, I beg your pardon, 800 mark, while the Sensex closed around 76,200. On the sectoral front, metals, IT, PSU banks, media, the top laggards in terms of yesterday's session, whereas you had pharma and healthcare that continued to outperform the broader market. I think it's the fourth or the fifth consecutive session of gains that we've seen in terms of pharma counters. In terms of broader markets as well, we ended in the negative territory, wherein the mid-cap index saw cuts of nearly 1% and the small-cap index fell comparatively lower, almost a 0.5% cut, to settle at around 18,800. Now, this is indicating, buying interest in select small cap stocks at lower levels. So that's where probably the alpha is right now. So clearly, the problem over here, Neeraj, is we're not able to sustain above those 24,000 levels for a long time. I mean, it's some reason or the other we are giving up that support or resistance, whatever we can call it, overall. Today as well, if you see Gift Nifty, again a flattish day is what is indicated.
Yeah, I think maybe all of us at some point of time will need to get out of looking at the Nifty and thinking of the Indian markets. Lest we be like what Japan was between 2000 to 2013, right? Or actually UK was between 2000 to 2013. Japan for a much longer time, since 1989 or 90. I mean, the Nifty may just do that. Now think of this, right? I mean, here's a very interesting statistic that, and I borrowed this from Varsity, that out of the 2,87,000 odd crores of FI selling in 2026 so far, nearly 45% has come out of one sector, which is banking. And banking is, of course, an index heavyweight as well. And therefore, if indeed some of the large banks are continuously seeing FI selling, and therefore the prices are range bound with the negative bias, it's very difficult for the Nifty to do anything, right? And therefore, I think from a trade setup, near some trade setup perspective, you could argue that Nifty's once again drifted towards that support zone, 23,800, 23,750 odd support zone. Let's see if it finds support around that or no. There is significant put open interest at 23,800, 23,500 strikes, making them fairly important support levels, I would reckon. And I guess Puneet will come in and talk about this in greater detail. But this is something you want to watch out for. I think if therefore it's becoming bottom up, and pharma is once again proving that it is the resilient sector of 2026. Time and again, you've seen pharma bets paying off, and yesterday was no different. IT cooled off, had some selling, banking has been sluggish, but pharma, in fact, if I'm not wrong, did really well in trade yesterday. So in some sense, that sector continues to be the bulwark, if you will. And frankly, if you just look at what Lawrence Belanco, for example, is observing on price action, it kind of tells you the same thing, right? He's saying that mid-cap breaking out, breakout building, but the large caps remain range bound. The Nifty Mid Cap 100, according to him, is pressing against a cup and handle breakout, which is that 62,113 to 62,907, targeting 77,687 to 78,000 levels, with the upside bias intact about the 200 DMA. He's flagging Aditya Birla Capital and Nykaa as buy candidates. On the Nifty though, he says there's limited change in the Nifty. It remains range bound between this 21,743 to 26,319 range, and the key support remains anchored at 21,743 to 23,000, while resistance is at those upper levels. So I don't think too many people are interested in the Nifty, unfortunately, guys.
Absolutely. I mean, but still, I think levels do become important.
Of course they do.
To track as well. But if you look at a couple of other factors, you know, the environment in terms of markets has shifted distinctly from a buy-on-dip structure to a slightly cautious structure right now. You are seeing a very range-bound phase, and this is coming in with a negative bias, and this is mainly on the back of the tech-led global rout that is evident. Now, your immediate critical support levels, again, that's resting at your 20-day EMA, which is 23,750. If this is broken in intraday trade, you could see some bit of more pressure. But if breached on the upside, there is strong positional support and cushioning that's coming in at levels of around 23,650 to 23,630 as well. A break below 23,630 could actually escalate selling down to levels of 23,500 as well, and there is resistance at 24,000. Apart from that, if you look at Bank Nifty as well, look out for levels of 57,750 on the upside resistance side, and on the support of 57,070 is what you should be watching out for. But clearly in yesterday's session as well, you didn't see that kind of participation coming in from banking majors. But let's quickly understand as to what the F&O cues are also indicating right now, because yesterday's sell-off that we saw was also on the back of the expiry. Puneet, good morning. What are the cues indicating today?
Well, good morning to all three of you. As you rightly mentioned, the last hour of the trading session continued to put pressure on what has been a good last 3-4 days. So we ended below yet again, very close to that support level, as Neeraj also highlighted, at 23,800, and look for a direction yet again. Now, the Bank Nifty has been offering support, but over the last couple of trading sessions, you're seeing yet again yesterday a 1.3% downtake. So very close to and below that 57,200 mark. Of course, we'll get those levels as well, but continue to monitor if we can maintain the 57,000 level, because only then will we have the next leg of rally, which is around 58,200, 58,400 and 58,800. So those levels still are some time away. We've been highlighting that from the first you'll start to get some banking updates, so maybe that could be the next key trigger on the fundamental side of things as well, but much needed as we look at strength, which a lot of participants are hoping for, at least from this benchmark compared to the Nifty 50 at this point of time. What we have seen on the cash market though, very flat kind of moves yesterday by foreign investors as well, but in terms of yesterday's trading session, and as we go into the next month also, the index long, which for the month of June as well, so we've seen 2 consecutive months where there has been no participation by foreign investors in the F&O market. April was somewhere around 20%, still not seeing those levels going into the last 8 to 9 weeks, but we continue to monitor those well. In terms of open interest distribution, we've highlighted 24,000 as a key important level, where you've seen one of the highest call open interest being built in. 23,500 has seen active participation yesterday from the put side, as Neeraj spoke about that as well. So the lower levels now starting to get some key interest, but still much lower than the historical last couple of weeks that we've seen across those green bars that you see on the left of your screen. Finally, stock-specific action. You highlighted that within the small caps, there's been a lot more action. So IRFC, 4% kind of move in OI change, not too much, but Vedanta was under pressure yesterday, and Bharat Forge was the other one as well. But in terms of the open interest losers though, you've seen APL Apollo and Hindalco continue to be a couple of names which have seen longs being unwinded as well. So overall, continue to monitor these individual stock-specific actions, because the benchmarks are taking a nap for now.
You said it all right. That's a good way of putting it. Let's talk about those individual stocks. And on my list, I've got IRFC. This is a development, of course, that you should keep an eye on. The government announcing an OFS, or offer for sale, to sell 2% stake in the company. There's a base size set at 1% with an oversubscription green shoe option of a further 1%, which takes the total possible sale to 2%. The floor price has been set at 91 rupees per share, which is a 7.8% discount to yesterday's closing price, and you saw a 2.2% slide in trade yesterday as well. The non-retail bidding opens today, and the retail bidding is set to take place on Thursday. This is basically just an update for you to keep an eye on. Solarium Green Energy is the next counter on my list, and it has secured a engineering milestone by winning a 186 crore solar EPC subcontract to build solar infrastructure across Maharashtra. And not the largest counter, and so therefore keep an eye on this one in trade. Syngene, Macquarie has maintained and outperformed and cut the target price to 735 from 835 earlier. They're saying what they see with regard to Syngene is it's moving from transition to transformation. The Syngene stock's recent correction factors in headwinds for its contract manufacturing business, and that is from one product, but it fails to capture, in the opinion of Macquarie, the upside potential from medium-term growth levers. The new management is prioritizing stronger commercial execution and driving higher capacity utilization for improvement in profitability as well as return on capital employed. In FY27, the guidance appears to be conservative according to Macquarie as well, and they have cut the target price to reflect the recent headwinds in the contract development and manufacturing business as well. But there could be upside, is what they're saying.
Yeah, I mean, from a 436 CMP, you still have a 750 upside to go to, so it's a 100 rupees cut that's coming in on the target price. On my list, it's an interesting one. I mean, you have Adani Enterprises, one brokerage note, where Morgan Stanley, what they've said is they've initiated coverage with an overweight rating. They have a target price of 3,638, a substantial upside from the current market price. They're calling it that it's anchored to the new India and India's premier incubator with exposure to multi-decade themes. They're forecasting an EBITDA that will scale up by almost 3 times by FY30. This will be driven by airports, new energy and primary industries. FY27, what they're saying, is marking as an earnings inflection for Adani Enterprises, and the drivers will be NMIA, Ganga Expressway and the copper plant, as well as the new energy capacity expansion as well. And for FY30, they're expecting Adani Enterprises to handle nearly 145 million passengers. Then this will be across its airports and have a 2 gigawatt DC portfolio through the JV route. So watch out for this one in trade. Rashi Peripherals, a smaller one, they've acquired 67% stake in VDA Info Solutions. Now this acquisition is done for clearly close to 368 odd crores. And if you talk about VDA Info Solutions, it's an enterprise technology and digital infrastructure solutions company. What they've said is they will acquire the balance 33% over the next 3 years, and this will be through a predefined mechanism. Excuse me. VDA has been valued at almost 550 odd crores, and this 100% acquisition is scheduled to be completed by August 2029. And what it helps Rashi Peripherals do is shift from its core ICT distribution business into high-margin enterprise technology solutions, digital infrastructure, and data lifestyle management. So watch out for this one in trade. And very lastly, Honasa Consumer. Now, it's interesting to see this company enter the nutraceutical segment. They're acquiring 58% stake in Fluence Pharma. The acquisition is close to 135 odd crores, and that's the enterprise value. And the buy, they've said that they will be buying the remaining 42% over the next 5 to 7 years. Currently, the sales for target entity are entirely B2B, and they're looking to create a B2C portfolio in the nutraceutical space and scale it as they go forward. They've incorporated a new arm, which is Honasa Health, for the nutraceutical B2C business as well. And in terms of valuations, the deal is valued close to 3.4 times in terms of sales, and the acquisition is small. If you have to look at approximately 1.7% to 3.6% of companies' FY26 sales to EBITDA. And in terms of Fluence Pharma, the company is a science-backed nutraceutical company. It's known for its differentiated and patented cyclical nutrition therapy, and they have a strong dermatology-led distribution network as well. So watch out for a Honasa in trade.
Okay. Well, a few names on my list today. I thought what Nandan Nilekani said on IT was interesting. So I know it's been highlighted before, but I just want to bring it up again because I also have Infosys as one of the stocks that I wanted to speak about. So Nilekani said that AI will complement and not replace traditional software systems, and said that clients will prefer building their software to meet the requirements or buying it directly from Infosys. But he says, or he thinks, it creates an even larger opportunity for Infosys. He's likely indicating that this gives the firm a market for supply of infrastructural components such as AI models, cloud infra, application programming interfaces, and more. Now, the debate is already there because this comment has been debated vociferously by both sides, people who are not so skeptical and people who are skeptical. I don't know if too many people who are bullish right now per se, but that's interesting. Infosys on its part has announced an expanded multi-year collaboration with NASDAQ-listed Global Foundries, a leading semiconductor manufacturer, to deliver AI-led managed services across GF's enterprise IT landscape. So interesting one. Let's see if there is some respite for IT today and Infosys in particular. While real estate stocks have been sluggish, Anantraj, because of its data center story, has largely been on the eyes of all the bulls. Now we're seeing a target price cut. I think, to my mind, the first target price cut that I've seen on Anantraj in a while. Nomura maintains a buy, but they've cut the target price to 650 from 700. They're saying visibility on revenues from the cloud segment should improve from Q2. Luxury group housing project to be launched in Q2 as well. But there is an EPS cut for 27 and 28 by 8 to 10% on slower than expected ramp up of cloud capacity and residential project launches. So the data center promise remains, but there's a lot of other things which contribute to Anantraj's earnings, which according to Nomura have seen a downtick, and therefore they are not so constructive. Again, a stock which has multiple promises around whatever data center capacities, but has not done too much. In fact, precious little. Real estate has just been very, very sluggish. Think of everything, right? Think of DLF, think of Godrej Properties, think of Marathon. I mean, large, mid, small, everything has been sluggish the last 6 months, so not quite going anywhere.
But I think, do you think, Neeraj, in terms of real estate, what's happening is the pace of new launches is something which is slowing down, and that probably is the concerning area right now.
That too, but I wonder if there is also a belief that margins will get squeezed because of the cost pressures uptick and the fact that the demand is a bit sluggish.
Yeah, and the inability therefore to pass things on, right? And delays also in construction, particularly in Mumbai projects.
Because of the water.
Not just water, right? So you had the assembly elections that had the labor issue earlier in the year. You had the West Asia crisis that caused supply chain issues. And then you had the pollution issue that because of asbestos particles and higher pollution or EQI in Mumbai, you had a situation where there was a stoppage of work that was announced by the BMC, and then now the latest water issue. So it's been a tough year.
And lest people think that we are talking about Mumbai real estate because we are in Mumbai. No, MMR constitutes a lion's share of overall India real estate sales. I think a very large percentage. So keep that in mind. Okay, and lastly, Jefferies on Tata Motors, PV, the PV business, they maintain and underperform with a target price of 300. Now, various brokerages have various views here. Morgan Stanley, I think, is equal weight, but I've chosen the Jefferies note because they spell it out to my mind very clearly that in their analyst meet that strong revenue but modest margin guidance for the India PV business. They say the console guidance implies a big margin expansion for JLR, which Jefferies believes would be tough to achieve. So that seems to be that principal pickle that Jefferies has in mind. Okay, we need to slip into a break on the note that you will get to see the whole watch list which is on our radar as we hit that break. Stay tuned though, we'll be right back.
India Inc.'s most respected names, chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to India Market Open on NDTV Profit. Now, months after the government has actually allowed 100% FDI in the insurance sector, sources tell NDTV Profit that the insurance regulator has actually received applications under the new regime. Shrimi joins in with more details. Shrimi, what are you picking up? These are exclusive details that you're picking up.
Well, that's right. India's opening up of the insurance sector to 100% FDI is beginning to see strong interest from the global insurers. What we are picking up is that IRDAI, insurance regulator, has received 3 to 4 applications from foreign insurance players seeking approvals for, acquisition, joint venture and ownership restructuring under the new FDI regime. In fact, among the, these proposals under review is Prudential's plan to acquire 75% stake in Bharti Life Insurance. Also said that regulator has received this application last week itself and said to be examining the proposal, including the implication of Prudential's existing stake in ICICI. So under the current IRDAI norms, Prudential may have to reduce its holding in ICICI below 10% of the transaction proceed, as the current rule won't allow them to actually hold majority stake in 2 insurance entities. Now, sources further indicating that a handful of global insurers are already in discussion with Indian counterparts and are expected to announce partnership, acquisition, and even the stake increase over the coming quarters. In fact, some preliminary queries have already been made to Department of Financial Services under Finance Ministry, and that indication is quite positive, as they are seeking some sort of changes in their ongoing talks. Now, given the interest emerging in the sector, industry expects significant changes this fiscal year itself. Just to underline, the space already been buzzing in the recent past. For example, Alliance has announced a strategic partnership with Jio, Pyramid Group and Shriram Group are exploring life insurance venture as well. Mahindra and Mahindra Manulife are also in active discussion. So overall, government officials expect the liberalized FDI regime to attract a lot of fresh capital, and as a result, a lot of action expected in the coming quarter.
All right, Shrimi, thanks so much for that important story there, and keep an eye on the insurance stocks. We've got Parag Thakkar joining us in studio along with Kush Bora as usual. And gentlemen, thanks so much for taking the time, and good morning to the both of you. Kush,
You saw drops from the top. You want to start about football or you want to talk about markets? I must ask you that first. Let's talk about markets. Let's talk about markets.
We will.
Because, I mean, yesterday Ronaldo scored 2 goals. There's nothing really to talk about. Messi has already done all of the magic and he'll do it again. So let's talk about the markets, right?
You kind of covered the football bit for me. I mean, that's as much as I want to talk about, Ronaldo's goals. But yeah, I mean, deserves a mention. I mean, they're always in the same league, for goals. Of course, Messi, for me, Messi stands out.
They're literally not in the same league.
Yeah,
one plays in the Spanish league and the other doesn't.
That is a good one.
Our executive producer, Prakran Tiwari, is taking offense to this.
Oh, he's a Messi fan?
Ronaldo fan.
Oh, he's a Ronaldo fan. Minority.
Sorry, Prax, I tried.
No. But just now to come back to markets. See, today is actually a perfect day for a technical analysis class, right? If the team can bring up the Nifty chart with the 100-day moving average and the 50-day moving average. Look how beautifully the Nifty has respected the resistance at the 100-day moving average, which was close to the 24,200 mark, which we've been speaking of as the resistance, and then the immediate support at the 50-day moving average at the 23,850 mark. So that level has been broadly respected. Of course, we ended just below that, and now if the team can switch to, let's say, the 20-day moving average, that's the next important level, which actually comes in at 23,650. So the 20-day moving average for Nifty at 23,650, that's the next immediate resistance. So for now, like I said, Nifty following the technical, the technicals perfectly fine. Also the derivatives data. Remember how we've constantly been speaking about the two heavyweights, Reliance and HDFC, having that wall of worry, if I can call that now, in terms of the call option base, around that 800 and 1350 mark. That's acted up. Of course, even I didn't expect such a drastic fall, if I can call it drastic, but such a sharp fall. That could be attributed to expiry. If you look at the action in the last 15 minutes, right? Last 30 minutes, in fact, the 3 p.m. trade as we call it, very clearly that can be attributed to the expiry moves. So for now, the kind of data that is being set up, I would once again reiterate, Nifty is a no-go, Nifty is a no-trade from a positional standpoint, because the 24,000 call option, 24,100 call option again have started to build massive bases, and the supports come in at 23,650. Like I said, the risk-reward ratio not favorable. Where do you trade? Bank Nifty still the index to go to. It respected the 200-day moving average near that 57,000 mark. It's holding that. Also, the immediate support on the downside at the 100-day moving average, beautiful. The 100-day moving average comes in at 56,400. So the risk-reward ratio is favorable. The Bank Nifty can again go up and test the 58,000 levels and move higher. So yes, with a stop loss at around 56,400, Bank Nifty is still your index to go to for a long trade.
Okay, and Kush, with that view, what are the stocks that you are recommending today?
No surprise, they have to be from this mid space. But I want to highlight one thing. मंडे को बोला था क्लियरली कि एग्जॉशन साइंस हैं इन द मिड स्पेस स्पेस एटलीस्ट इंडेक्स लेवल पे हैं, तो कल इंडेक्स बहुत ज्यादा नहीं गिरा होगा, बट हमने देखा था द मार्केट ब्रेथ वाज वेरी वीक, राइट? तो थोड़ा बहुत प्रॉफिट बुकिंग बनता है. आई होप द व्यूअर्स आल्सो डिड दैट, और एटलीस्ट होल्ड देम विद TSLs, राइट, ट्रेलिंग स्टॉप लॉसेस, सो दैट द कट्स aren't as deep. That could well continue some consolidation here or there, but the view on this mid space remains positive. This is perhaps just a profit booking dip. With that view, the calls for today: Granules, FDC and Genus Power. Now Granules is a positional bet with slightly bigger targets. So 825, 865, these are your targets. 747 is where you keep that stop loss. FDC comes on the radar after a while. It's seen a good run over the last 5-10 sessions. Good healthy volume accumulation, clearing a few resistance hurdles. So 424, 436, these are your targets. 400 is where you keep that stop loss. And Genus Power, this is by the way an extension because we discussed it about 5-6 sessions ago. For targets of 340 and 350, came very close to that second target yesterday. Massive volume breakout, right? And of course the price action also following suit. So you can hold it or now buy it with targets of 360 and 370 with a stop loss at 335.
Got it. Okay, Parag bhai, good morning first of all. And the question is, in moments like this where you've seen the benchmark rise for 6 out of 7 days and the broader market's looking quite good, in these moments when there is a dip is the moment where you look to add, right?
Yeah, definitely. So my view doesn't change. The only problem which has happened is dollar index. Because of hawkish Fed statement, or market has taken it very in a way which is very hawkish. And that's why dollar index is now at 101.21, and that has created this is a new problem. Now war problem is just behind, oil price is below 80, but dollar index is a new problem for emerging markets and for any other asset class, right?
Okay.
So that is a new problem, but my channel checks.
I wanted to get to that, Parag bhai. ये charts, हवा में बातें एक है, दूसरा on ground reality
Yes,
है.
yes,
So
yes.
you've now done some tremendous work on ground,
Yes,
right? Tell us
yes.
a synopsis of what you observed.
Yeah, so I'll tell you, start with financials first. Whether it is large banks like ICICI Bank, Axis, Kotak, SBI, asset quality is absolutely pristine. There is no problem in asset quality as of now.
Despite the
Despite the war conflict, despite the tariff things, so there is no asset quality issue. First
Across
of all,
sizes.
Across. So this I'm saying large banks,
Large
right?
banks, okay, fine.
And plus credit growth is also very good. As I said, corporate credit growth has picked up. People like Axis are saying that even on the unsecured side, or Kotak is also saying, for example, that on unsecured side also they are becoming more confident, which is a positive news. Of course, credit card remains a little bit muted thing, and where everybody is watchful also. So there is no problem. Then when I speak to affordable housing finance companies like Home First, Aadhar, mainly these two, and they are saying that disbursement growth, which generally goes down. Seasonally, Q1 is weakest in terms of disbursement and weakest in terms of asset quality. There I have got the feedback that this time the disbursement growth YOY is about 24-25%. Okay, and asset quality is as good as Q4. Seasonally, Q4 is the best quarter for them in terms of asset quality and disbursement. This time, asset quality is as good as Q4, surprisingly.
Why is the disbursement
and that too,
higher?
these guys are lending to the people in Surat, people in Coimbatore, which are affected zones.
Sure. So,
right.
but why is the disbursement higher? What are they saying about why the disbursement?
So the demand is good. They were actually lending slowly in some of these areas which were tariff affected.
So pent up demand.
But they were slow, but they realized that actually people have figured out and people are actually repaying their EMIs on time.
Okay.
And so now they have again accelerated growth. So these are the businesses which 4.5% ROA, 4 to 4.5% ROA, available at 2 times price to book, growing at about 20%.
Okay, so large banks, affordable housing.
Affordable housing. The third one which I did was ceramic tiles. So in ceramic tiles, for example, the listed ones are actually benefiting because Morbi was slow because of the gas issue. So the market share has shifted. The prices of ceramic tiles have gone up by 20-25%. So all these guys like Kajarias and Somanis of the world will report higher revenue growth because they have increased the prices, plus they have gained volume from the unorganized people.
Correct, and that's what Somani Ceramics, we spoke to the management as well, and that's what they indicated, that they got a lot of market share because they had the raw material supplies with them, which the unorganized players did not. So in all of this, if you have to look at value.
Fourth point, let me just complete. Fourth point is that auto components. For example, forging, NRB bearing, Rolex ring, all this, either they are of our portfolio companies or they are under my radar. Everywhere the problem was April, you had a gas issue.
Correct.
May, you had a labor issue because we had election in Bengal. And plus, because of that LPG shortage thing, workers went away to their homes. But now from June, everything is okay, and they have got huge orders. Okay, again, there also, the people who are prepared, who are large, who are under leveraged, they are gaining from the people who are not prepared and who do not have access to capital. So I would say on ground channel checks, it is not as bad as people have anticipated, sitting somewhere in US that India go gaya. Because oil price went up, because tariffs were 50% for some time. You know, if you speak to companies like LG Equipment and various other companies which are either in my portfolio or under my radar, the picture is not as bad, at least for the organized, under-leveraged listed companies.
Okay, ceramic tiles and auto bank. Anything new that you've identified which will be on your radar right now?
Affordable housing finance, very clearly. These two companies which I spoke of, I think very clearly it's a 20% and above compounding, available at 14-15 PE on FY28, and 4% and above ROA available at 2 times FY28. It's a very compelling opportunity.
Okay, that's housing finance. Anything quickly in terms of auto anch or ceramic tiles, as you mentioned about both these?
So there I'm still doing my work and a lot of auto components. So we have discussed earlier also, like Vindacop and Samvardhana, Motherson and all that. And there the structural theme is content per vehicle increase and premiumization. And that also continues. And gaining market share from other unorganized or I would say fragmented ones.
You know, sector-wise, yesterday though, if you talk about the sectors that underperformed, of course, metal was the worst performer, but IT was not too far behind. It is in focus yet again today. Infosys management used its FY26 AGM to reinforce confidence in the company's AI strategy. Neeraj referred to some parts of that. Jasmeet joining in to talk about all of the insights from that AGM. Jasmeet?
Well, very good morning, Alison. Thank you for that. The Infosys AGM for FY26 was more of positioning itself towards the AI, where the company gave out its AI outlook and where it sees itself in the coming years. While Nandan Nilekani, the chairman of the company, gives out the commentary saying that the disruption of technology is real and this time the AI is far larger and more disruptive. While it also calls out that the Infosys is better positioned when you look at the overall AI disruption space and it's in a better place to take out the more opportunities. And he also calls out again that saying that there's an AI deployment gap which is at large, and keeping out that gap between the AI models and what enterprise can do is a real opportunity. While he also mentioned about second opportunity, stating that the clients are shifting from using softwares to building in-house, where the companies like Infosys also see opportunity in building out that as well. While lastly also mentions that the overall addressable market is roughly at $300 to $400 billion by FY30, and AI will not replace companies like Infosys. When you look at the commentary by Salil Parekh, he gives more of commentary over the AI revenue of the company, which currently stands at $1 billion odd. Further, he also states that the AI revenue has been growing consistently, and last quarter in Q3 the company had given out the overall AI revenue contributing 5.3%. With this, the company shows how strong they are in the AI space, unlike the other players.
Okay. Yes, this has been an interesting time for IT. Remember, we spoke about this, that while Friday was a bad one, some bit of recovery seen and then again some bit of selling. So it's all over the place, or was it the other way around? But anyways, my point being, every large purchase into IT is followed up with some bit of profit booking that is happening as well. So unfortunately, that's not quite working out. But Abhay, you are very selective now, right? Earlier you may have been concerned, but now you're very selective. Not
Confused is a better word.
Confused.
Let us admit it. Yeah.
Not too many people admit it. So yeah. Okay,
so I clearly admit it is to and fro in IT. And one thing is for sure, valuations are extremely compelling.
Got it.
They have gone to a level where, people have said that, the FY27 is completely washed out, and even FY28 growth is under doubt. I hope that is not the real case. I am equal weight, and that shows my confusion.
Okay,
Right.
hear you. Let's get in Manav Medewala. He's from Mirae Asset Share Khan, Annie Johnson, to dissect this analyst day and the outcome thereof and the comments that have come in. What did you make of the commentary, and what's your view on Infosys, Manav? The jury split right down the middle.
So, as rightly said by Sir, it's more of an equal weight right now. We believe the recovery for Indian IT is likely to be more gradual rather than, sharp. The revenue contribution remains nascent. There are not much of a, growth drivers at the moment right now. So, FY27 is more likely to be a transition year, focused more on defending existing revenue streams, improving productivity, and kind of pivoting towards AI-led offering. So not much of a growth to be expected in FY27 is what I believe.
What about the valuations, Manav? Because over the course of the last 3 or 4 months, I think the valuation conversation has drifted from, they're not as expensive as they have been in the past, to moving to look at terminal value, to looking at certain other metrics to say, hey, now is the time when they're looking attractive. And every time you've had that conversation, they've dropped further. So how are you looking at the valuation picture?
So, yes, valuations are at a all-time low, but what's happening right now is even a slight miss in the result or a commentary is turning out to be, bad for the stock. Let's say what happened with Accenture on Thursday and Friday, right? So, yes, valuations are at all-time, comfort levels. One can go and one can look at the valuation, but the question remains the same. Will AI disrupt IT companies for like completely, or will IT companies will be able to pivot back and gain back their valuation and revenue growth?
Well, I think, Manav, thank you so much for that. And, thank you for taking the time out. And I think it's an important point that he's making, that tactically, if the market is in the mood of punishing some of these names, then maybe there is merit in staying equal weight and not overweight, simply because the stocks could get pummeled even if the valuations are good, as happened with maybe Accenture or some of the others that could happen. So
as we've said, as we've noted, as we've spoken to certain proponents of IT in the past who are now underweight and have barely any position in it, either equal weight or underweight. That is not just Parag Bhai, I'm talking about others as well.
Many others, agree.
So if you listen to the commentary also, only Coforge is like coming on the front foot and saying, of course, yesterday Mr. Nilkani has also said.
I think emphasis is done that, Parag Bhai.
Emphasis, correct. But market is not willing to listen to it.
Okay, Kush Bora, आप short कर रहे हो किसी IT stocks को?
Not really. See, I can have my views, but the market will do what it has to, right? We've tried to be constructive, but like you said, every second day, there is a selling pressure that comes in. Right now, if you ask me, there are a couple of, legs of positive divergences setting up on the Nifty IT index, even some of the heavyweights. So as long as this recent low of 26,600 is protected on the index, I think there is a possibility of a rebound on IT, but I would still prefer the mid-tier names. Persistent, Coforge and Emphasis, these three in particular.
Okay, stocks-wise, and there is a development, by the way, with regard to the steel space. India has initiated anti-dumping probe against imports of electrical steel from China and 3 other nations. So that's something to keep an eye on with regard to the steel pack. But the metal pack as a whole just collapsed in trade yesterday, didn't it? Is there possibility that it'll go even further?
A very good possibility, because metals is typically a momentum play, both on the way up and on the way down, right? So I've said in the past that yes, I remain constructive on the metal names. Where do I buy these stocks from? A lot of these is when they start to show stability and that first rebound. Like I said, I don't like to catch the falling knife. There is still volume-backed downtick on some of these names. Look at SAIL, look at Tata Steel. They are coming close to support levels, but whether they respect these or actually slide further remains to be seen. No point being preemptive. There are a host of other stocks and sectors to be constructive on. So for now, metals on the wait and watch list. The downside pressure might just persist for some time.
Okay, so metals on the wait and watch list from a technical perspective. Parag Bhai, for you, across, you have steel prices which have corrected, aluminium, aluminium, silver, gold, and I don't think so anyone's expecting an improvement immediately. But where valuations stack, and if there is a correction that comes in terms of metals, would you look at buying at lower levels?
So there's one stock which is in my portfolio, which is JSW Steel, which I'll keep buying on dips, and another stock is Hindalco, which I'll keep on radar and I'll buy on dips, which is not there right now in the portfolio. The reason for entire metal correction is very simple: dollar index is going up. So once this entire anticipation that the new Fed chairman is going to be hawkish or is going to increase interest rates, that anticipation of the market goes, that cools off, that expectation of a rate hike. Then you will see reversal in metals and you will see reversal in dollar index, which is going up. So till then you'll have to wait. But I would say that JSW Steel, as I've told many times, it is a structural buy for me. He is the most efficient converter, and he puts plant at the lowest capex per ton, and he operates plant at lowest opex per ton, and he's a converter. So I would say that unless steel demand in India falters, or there is huge dumping in India by China, or which government of India has thankfully stopped, unless those two things happen, JSW Steel, nothing changes too much. And they have already said, Jayant Acharya, the CEO, has said that their worst case floor EBITDA per ton is 9,000.
Okay. So, got it. Okay. Yeah. All right. So watch out for JSW Steel from the steel pack. Soumya Sarkar joining in to tell you what the chatter in the dealing rooms is. And it's an interesting day, particularly after you've seen cracks in the broader markets. Not necessarily the index level, but certainly stocks that are seeing cracks, right, Soumya? So what are you picking up?
Well, a few stocks that dealers have highlighted that one should keep an eye out for in trade. Firstly is Vaibhav Global. There are sell flows on the large HNI and PMS desk. Dealers are expecting a block deal very soon in this counter. Dealers expect Nalanda Fund could be a potential seller here. For Haikal, there's a buzz of a potential inter-promoter transfer. Earlier, there was a buzz of a big block deal coming in, but dealers are indicating that it would be an inter-promoter transfer only. When it comes to ICICI Bank, there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter at lower levels, and delivery volumes are seen on the higher side. For Deepak Fertilizer, there are buy flows on the large HNI desk. Dealers are expecting the first quarter earnings to be quite strong for Deepak Fertilizer. For CMR Green, the company will be reporting its Q4 numbers on 30th of June, and dealers are expecting a strong set of numbers here. For JSW Infra, dealers indicate that the QIP demand has been quite strong, and they have highlighted few names like SBI Mutual Fund, HDFC Mutual Fund, GQG and Capital Group among the top buyers. And Craftsman Auto was part of a segment yesterday where we did indicate that the block deal was largely the big buyers in the block deal were HDFC Mutual Fund and Invesco, and that has come out to be true. If you look at the bulk and block deal data, HDFC Mutual Fund and Invesco were among the big buyers of a Craftsman Auto block deal that happened yesterday.
Interesting, yeah. And some of these, some pretty good names into Craftsman for sure. Thanks so much for that, Sumit. It is interesting that the markets have a semblance of sanity, and there are a bunch of OFSs and QIPs and fundraisers, even though we are not seeing too many IPOs. So that's one thing to note. Remember, an IPO takes a lot more planning than a QIP, if you will, I would presume. But be that as it may. Craftsman, interesting one. A lot of good buyers out there, Parag Thakkar, but expensive?
Yeah. So basically, it's a great company. I have been tracking it since its IPO. It came at 1,200, 1,300 rupees. Very good company, clean promoter, doing very well. Of course, right now stock has gone up too much, so I'm not a buyer at this price. But clean quality company and clean profit making, very good, decent proxy to India's economy, CV cycle, and.
Okay, good company is you've got the tag from Parag Bhai, so watch out for Craftsman. It's had a tremendous run over the last 1 year. Let's talk about individual counters, and we've spoken about quite a few, but let's round up the list. We've got Puneet joining in to tell you about what's on his watch list this morning. Puneet?
Well, thank you for that. The one key counter today is Tata Power, which will be continuing to be in focus. They've received an operational extension for the Mundra plant, and the Ministry of Power has essentially extended the validity of Section 11 directions under the Electricity Act 2003 to September 30th. Now, this is important because, as my colleague Varsha also was highlighting to me, that the extension was only till June 30th earlier, and given the rising power demand, the extension has now come till September 30th. So you will see 2 quarters of that in this particular year of FY27 for the company. Regulatory mandate also forces the full capacity operations of ultra mega power plants as well, and hence this is a key operational update coming for the company as well. They operate 5 units of 800 megawatts each in Mundra currently. The second one, very interesting names, a couple of them in the banking space. City Union Bank is the next one. They're looking at a capital raising framework, essentially looking to raise 500 crores via QIP in the next board meeting. Comes at an interesting time because we've seen a management change at the company. R. Vijay has taken over as the CEO on 1st May of 2026, replacing the outgoing Mr. Kamakodi, who was there for 15 years. So capital raising, something to watch for City Union. Similar one for Yes Bank as well. Interestingly, a management change there as well. They're looking, June 29th is when the board meeting is scheduled to happen, and they're looking at various instruments, including QIP. So these 3 stocks continue to be in focus today.
Got it. Okay, so interesting. Some interesting names coming in there. And in fact, Tata Power is an interesting one. City Union Bank as well. But Tata Power specifically, the Mundra plant gets an operational extension clearance. We've not heard too much about the power producers in the recent past, right? And there was this whole theme, data centers will require more power, etc., etc. That's gone a little quiet. Why do you think that is?
Monsoon market is right now running on very short-term narratives. So when summer was there, power demand went up to 11%. So now everybody was that time everybody was talking about power. Now monsoon has come, so now nobody talks of power. Now people will find out something else. But it's okay. It doesn't change the intrinsic value of the business, according to me, especially in the predictable businesses like power producers, who have a long-term PPAs and regulated ROE of 15.5%. So I would say that NTPC looks reasonably valued.
There was an update for NTPC today
NTPC
as well,
looks reasonably valued at current valuations, and of course you can have a look at but it's a sector where you can expect 10-12% CAGR return, not too much from it, because it's a regulated sector. You have a 15.5% ROE business, and it's a predictable. Your growth is in line with your capacity growth.
Yeah, okay. And there's more to talk about in that space as well. But I want to talk about one of, if not Parag Bhai's favorite sector. So Jeffries on banks. RBI FCNRB FAQs have come through, and there's more clarity that has come through. What is Jeffries saying about that? They're saying that it's supportive, but some rate hikes are needed to lift the mobilization of the FCNR deposits, permitting a foreign branch leveraging, which can reduce friction and counterplay risks, might just be positive. Allowing different rates based on tenor and value is also something that could work. There are supportive, or rather those two measures are supportive to FCNRB mobilization. They feel, Jeffries, that banks are offering lower rates or internal rates of returns, which can limit the mobilization. They expect the FCNRB rate hikes to take place, especially for large ticket deposits for 3 years, and will wait for rate changes by banks. Citi, by the way, has waited on banks as well. The clarification reframes the FCNRB scheme's character entirely from cost arbitrage instrument to a full spectrum balance sheet expansion play, and is extremely positive for the Indian banks. Layered atop the CRR, that's a cash reserve ratio, and SLR, that's a statutory liquidity ratio, which is what banks have to maintain in the form of government bonds. The exemption with regard to those two ratios and the favorable LCR treatment. The value proposition, according to Citi, is multidimensional, and it can potentially attract higher foreign deposits or borrowings flow than 2013. That's saying something, because if I remember correctly, $40 billion was mopped up in 2013, so you're expecting more than that from this, particularly $50 billion.
And plus now this leveraging is allowed. So, this is the thing which I wanted to highlight, that government and RBI, all this short sellers, all these short sellers who are shorting the Indian markets and treating Indian markets like a punching bag, or a funding short, as they call it. Just one thing, that government has done whatever was required, right? GST cut was timely. Now this in tax incidence on debt, withholding tax reduction, and all that was timely. Then RBI did not rush in and say, then I'll increase interest rates, because it was a supply side shock and it was not an overheating of economy. So he took a call, which was a brave call, not to increase interest rates. We have heard many banks, central banks, increasing interest rates, right in the middle of the war. When you know that war is going to end sometimes, or actually oil prices will fall, but still our RBI held on, and they said that no increase in interest rates. And now this FCNRB deposits to attract for FPI flows. So government and RBI are also doing all correct things, and they are in full force. So I would say that I'm not seeing so much of negative signs as what market is indicating.
Okay.
But I mean, the only thing out here is that for specific banks, I was just looking at the stock price, and then we'll of course mark the markets. But HDFC Bank has been at this range bound, 750, 770 for 5 years. Now, yes, it's a high quality bank. Yes, it's traditionally given returns. At some point of time, I'm sure it will. But you could have made this argument in 2024, and still for 2 years on, it's still not given returns. That's the problem with. I mean, it's HDFC Bank. ICICI Bank has. I mean, some of the others have, but Kotak, HDFC Bank haven't, and that's the truth. But anyways, so no comment. I mean, ICICI Bank, fabulous franchise and has given returns. So it's very, very bottom up also within this larger banking pack as well. So please keep in mind, and your risk appetite and your time horizon could be very different from experts who comment about this on air. So please bear that in mind when you're making your investments. But the markets have started, the pre-open rates at least have started. So let's pull the rates up. Not too much in terms of news flow today, I think. But, IRFC, for example, there is an OFS at a floor price of 91 maybe. So that stock could be in focus, about 94, 4% lower. Yes, Bank has a board meet to consider raising of funds through issuance of equity and debt on June 29th. Maybe it is in focus, but just struggling at 24. SIS, board meet for a proposal of buyback of equity shares. Maybe this market likes it, up about 3% And Craftsman had some very good buyers in the block. HDFC, Invesco, Franklin Templeton, etc. Maybe that overhang going, could help the stock. And of course, then a clutch of brokerage notes, right? Jefferies on Tata Motors PVs maintained underperform. CLSA's come out with a note on Vedanta Aluminum with an outperforming a target price of 540. So multiple stocks. But Biocon is certainly strengthening its Malaysia play as the partner duo Pharma wins a sizable government insulin contract. Varsha has details on this. Varsha.
Total contract value stands at around 515 crore, and the Biocon's Malaysia partner has won insulin contracts from government. Now, what will Biocon do? So, Biocon Malaysian arm will supply insulin products, which includes your human insulin, insulin glargine, and of course insulin aspart. Now, this supply is only meant for Malaysian government healthcare system, which is to improve access to affordable insulin for diabetes patients. Now, if you see, around 4.75 million people in Malaysia have diabetes, and this will actually strengthen Biocon's presence in Malaysian market, which will also support government push for better healthcare access. And onto the capacity, almost $600 million has been invested into this Malaysian unit since 2011, and this facility is actually approved by US FDA, EMA, and other global regulators, and only Malaysian facility which has been approved by both US FDA and EMA approvals for Stellite Biologics. So overall, yes, a positive development when it comes to Biocon.
Got it. All right, Varsha, thanks so much for that. Stock is up about 0.9% in the pre-open session. Let's see where it goes. In the meanwhile, we've got Chandan Taparia, who's head technical and derivatives research at Motilal Oswal, joining us this morning. Chandan, very good morning to you, and thanks so much as always for taking the time. When you look at the equity markets, do you think that yesterday's drop was warranted after the kind of run-up that we've seen, particularly in the broader markets? And are you looking at the rest of the week positively?
Good morning. Thanks for having me. So yes, the market fell to cheer an important level of 24,224, and after the struggle of 3-4 days, it witnessed a corrective move. Multiple reasons are there behind the same, because market rallied by more than 1,000 points after forming the bottom of 23,072. It headed to 24,189. Again, now it's flirting near its 50-day exponential moving average, but yesterday decline was sharp, and that is restricting the upside as of now. So I believe again market could be the range bound. On downside, 23,600 could be the support. Upside, 24,000 to 24,100 will be the hurdle. So the trading range is going to be there, and upside seems to be kept. We have seen some change in the data setup. The India VIX has seen a spike of around 9%, now back to 14 marks. FI's long short ratio is near 13. Put call ratio has seen a decline, and the Bank Nifty, which was comparatively holding well, also witnessed a corrective move of 700-800 points from higher levels. So I think because of that, some more consolidative could be there. 23,600 could be the key trigger for the week to again attract for the buying or decline strategy in the market scenario.
So, range bound upside is capped, Chandan. In this kind of a market scenario, what would your top picks be?
Yeah, so positive on the Nifty Pharma. We have noticed that Nifty Pharma Index has given a consolidation breakout. In fact, a formation of bullish pole and flag on the weekly chart. So most of the counters are doing well, and here I would prefer to go long in Lotus Lab, one of the strongest counter, which is up by more than 33% in this year. It has given a consolidation breakout on the daily and the weekly chart, has been making high rise, high lows. So with support of 1444, look for an upside target towards 1540 marks. One is the mid-cap idea, that is the Janus Power. And this counter has seen a major consolidation breakout with significant spurt in the trading volume. It has given a consolidation breakout of almost 33 trading session with a decisive close above 335, 340. So one can buy with support of 335, and this counter can head towards 365 to 370 marks.
Again, there is a bit of a commonality. Chandan, thank you so much for that. Kush, did I hear you talk about Genus Power as well?
Absolutely, for targets of 360 and 370 with the stop loss at 335. Yeah.
Okay, 360, 370. Can I just bring up Chandan's recommendation on Genus Power and the target price as well, if we can? Chandan's target price is circa 365, wedged right there, right? So 349, guys, two experts talking about Genus Power. Keep this at the back of your mind. Now, guys, I'm seeing a sales note today from Nuvama, I think, which is saying that transformers channel checks, they've done some transformer channel checks, and therefore we should bring up the stocks like Taril, Voltap transformers and some others. So they are saying that their channel checks are suggesting that transmission capex is plateauing and transformer pricing has started to come off and may reflect in operating profit margins. Of course, they say FY 29-30, that far out, but they are saying no new trigger after the current HVDC ordering in September. Softer pricing also led by higher capacities coming in 400 kV, and therefore all high voltage transformer companies could be impacted barring CG Power. Now, Parag bhai, the belief is that with the kind of capex happening in the power sector and the shortage of transformers, this will, the golden run could continue. They are saying that the capex is plateauing and pricing is starting to come off. Will it show in the transformer stocks if indeed pricing is coming off?
So I'll tell you, as I've spoken earlier also, I was with a very good, one of the names which you showed, and they are very clean and honest people. So they told me that current margins, which was there 2 quarters ago, 21% EBITDA margin. He said we had never dreamt of that we are making just a simple product transformer and we can make 21% margins. And now the margins are correcting. So I agree with this note that margins are going to correct. And I would say that, see, nowadays this is my biggest problem with the market. Because of these algorithms, hedge funds, one trade catches, then it just goes on and on and on. And it takes you to the completely overvalued zone where there is no fault of company, but you have taken it to such a level that it cannot resist there. So I would say that this is happening across things. So again, this space is also, I think, highly overrated. The multiples here are tremendously expensive.
All of them, Parag bhai, Taril, Voltamp, CG Power, etc. You think all of them?
So CG Power, as this report also says, is slightly different. Yeah, they are putting semiconductor plant also. Of course, the stock is very expensive, but it will find its buyers because the management is superb and growth is there.
But the others, there is a risk of a price erosion.
100%. Even I would say that even this AI-led automation, robotics, whatever you call it, okay, ABB or Hitachi Energy or all this, above 100p.
You won't get that. Okay, fine. But lest viewers get confused, sorry, very quickly. We are sticking to transformers and Kush Bora. I want you to tell me on the charts, transformers and rectifiers, as well as Voltamp transformers. 2 names out there. What do they look? How do they look?
Very steady, very gradual uptake. I wouldn't really play for momentum, but if I were playing for like a steady uptrend in a positional manner, I would consider Voltamp in particular with a stop loss at about 9,500.
Okay, so that's for Trill and Voltamp. Voltamp is still slightly on the expensive side as well. But if you have to look at, it's 9:10. It's time for the big brokerage call as well. JP Morgan has downgraded IT. And what they've said is they're calling it as the sector continues to remain under pressure with AI deflation being the key headwind for the upcoming years. Sharad joins us with more details. Sharad, what are you picking up?
Well, good morning, Hiral. And largely what you're seeing from JP Morgan is a downgrade coming in for the large cap IT names. HCL Tech's downgrade is there. It's pretty significant, to be honest, from the target price. If you look at it, Wipro, Tata Tech also have been downgraded to the underweight category. Now, of course, they've stated that the Indian IT faces an uncertain demand environment going ahead. Also, a little bit of concern is just a 2 to 3% revenue growth, which has come over the last 2 to 3 years from the industry. And the AI deflation is only in the year 2. Also, in the light of this uncertainty around the timing of positive inflection, there's they are moderating their medium to long-term growth estimates. They do not expect large caps to hit mid-single-digit growth and over around that 3 to 4% revenue growth. And lastly, the overweight at least remains for TCS, Infosys, Tech Mahindra, Coforge, Persistent, and Sagility.
Got it. All right. So quite a few stocks there. By the way, since we were talking about power-related companies, GE Vernova, T&D, this is something that Jefferies weighed in on yesterday, and there was a note that they said it was a hold with a target price of 6,000, which is still a considerable upside, but they say that no large parent orders in FY26, gross margin upside may be limited in FY28 to 29. The value of the company at 65 times price to earnings for 36% EPS CAGR over FY26 to 28 does not offer upside from this point. So it's effectively the same that you've said
valuations,
right now.
There is no fault of companies. The valuations market has taken to some crazy levels.
Okay, 2 minutes left. Let's nail it down to that one top idea from both our experts. Chandan Taparia, you've given us 2 ideas. One of them was Genius Power, I distinctly remember. But now that the pre-open rates have settled and you know the rates at which some of these stocks might open up, what is your one top call for the day today?
So I think better to go with Genius Power if you consider that idea. With support of 335, I've given the target of 365, but one can revise the target to 385 to 400 also.
Kush?
How would it be if I said the same stock, right?
It's cool.
No, of
If
course.
that is your top idea, sure.
No, it is, and the consensus itself kind of speaks for the strength of the stock, but I will go with another one, which is FDC, also a stock that we discussed at opening marginally, in the green, so the risk reward ratio is still favorable. 424, 436 targets, to reiterate, 400 stop loss. Maybe if you want, you could bump it up to 404.
Either Monday or Friday, ZF Commercial was something that you highlighted, right?
Yes.
The stock is up 5% in pre-open. What would you do?
Absolutely. I would continue to hold. Well spotted, Alex. Thank you so much for that. It was the weekly pick. Now very close to the first target. In that case, it was 16,500. I think there's a bonus of 5:1 on this one. And hence, you're seeing the price change. I would continue holding on to this. Just bump up my trailing stop losses to about 2650, 2700.
Okay. I would want to talk to Parag Bhai about Honasa, but we'll do that after the opening. On the charts, if you look at a Honasa, Kush, would you be a buyer? There is some uptick, but on the fundamental side, it's diversifying into nutraceuticals as well.
There is certainly an uptick. Risk reward ratio at these levels not favorable. So maybe a dip closer to 410, 415 levels is what will make an interesting entry point for Honasa.
Okay. Well, some fabulous calls given by our experts the last few days. Some great conversations today on the show as well, I must admit. So now, as we prepare for the market to reopen, remember, Asia is a lot more measured in its performance right now relative to yesterday. I think some of those markets, including Korea, have bounced back, and Samsung and SK Hynix are in the green, so that helps. But let's see how we start off. We'll start off presumably a bit lower today. The question is, what do we do post that? And do we kind of hold on to those lower levels, or do we bounce back? For now, flattish actually. Not bad, really. It's actually not a bad start, with the market with it looking good. So suffice to say that the mid caps and small caps may not be cracking under any way. Small cap index is flat, mid caps are flat too. Actually, it's a fairly flat start, you could argue, for almost all key indices. Nifty IT though is bouncing back 0.5%. Interesting to see if Infosys is actually leading the charts or no. Let's get the heat map up on the screen and see what's moving and what is not. Let's see what is in the green. It's even Stevens, by the way, so keep that in mind. Equal number of green and red. Tech Mahindra and Infosys, two stocks in the green at the top of the pile, followed by Adani Enterprises about 1%. Dr. Reddy is up about 1%. Cipla is also in the green. ICICI Bank making its presence felt. So a bit of IT, a bit of pharma. Only ICICI Bank, no other banking name in the green really. So bear that in mind. I saw Indigo somewhere. There is an HSBC note today which is saying that key questions answered and they are constructive there with a target price of 5,500. Indigo is doing okay. What is not doing well? Bajaj Auto 1.5% lower. Airtel down about 1% as well. HCL Tech down about 1%. Hindalco down about 1%. I think the markets are choosing Parag Thakkar stocks today and shorting them. Eicher Motors, Grasim, HDFC Life and NTPC are some of the others. But really fairly muted start on the gainers and the losers. IT is doing well, interestingly. So bear that in mind. Maybe the pressure on the bourses is coming in from the losses in Airtel because it's a heavyweight for sure. Maybe a bit of Maruti as well. So I think those are the ones which are kind of pulling the index lower. But Alex, not bad for IT.
Not bad for IT, particularly in the context of what happened yesterday.
Sorry, one more point. Sorry, I just missed it. Adani Enterprises, I think it's on account of that Morgan Stanley.
There is a Morgan Stanley note, and considerable upside is being seen even from this point. But let's talk about the sectoral picture as well, because this is kind of likely going to reflect what you're seeing here. Yeah, exactly. So you have IT that was the second worst performer in trade sectorally yesterday. It's bouncing back somewhat, about 0.8%. Pharma continues its up move from yesterday. It ended with gains about 0.9% as a pack. As a whole, it is still gaining about 0.6%. Healthcare was okay yesterday, continues to do well today. PSU banks just about 0.4%. Nothing really to write home about. In the Nifty Bank, that's the preferred index, at least if you look at the sectoral indices. Kush spoke about it today, but 0.33%. Let's see where it goes towards the end of trade. What is not doing well at this moment? Auto, but just about 0.25% lower, and media, not too much to speak of here as well. Consumer durable. So what you will take, I guess, is the fact that you're not seeing too many big cracks on the screen. The only question is, when will the momentum kick in on the upside, if at all? So let's talk about individual stocks, and Honasa stands out. This is the acquisition that they've made, and we spoke about it a fair amount of detail. We'll speak some more about it after. No, it's completely unchanged in the nutraceutical space. So it's certainly something to watch out for, but we'll see what the stock does in the rest of the session. Tata Power, positive regulatory development for the Mundra plant. Stock is up about 0.5%. Rashi Peripherals, they set to acquire 67% controlling stake in VDA Info Solutions. The stock is reacting up about 5.2%. City Union Bank, there's a QIP that has been approved by the bank. Let's see what it's doing. It's about 0.9% higher. A couple of order wins. Solarium, which we can't show you, it's doing pretty well, but remember it's a sub 500 crore market cap company, so bear that in mind. And GRSE, there's an order win here as well. But the steel companies losing ground today as well, but less so, I would think, than the aluminium counters. Of course, there's a probe by the government with regard to dumping of certain electrical steels from China and certain other nations. Yes Bank is set to consider fundraising. The stock is up about 1% or so. You have SIS, the board meeting is set to discuss a buyback, 5.6% or thereabouts. IRFC is losing ground. It was expected to do so. It was a 7.7% discount to yesterday's closing price, the floor price that has been set for the OFS. And finally, solar export stocks. The WTO body has agreed to examine Indian solar tariffs. According to an official, all those stocks are currently in the green. So Hiral, frankly, not too much in the way of stock specific information or fundamental news. I wonder if there are any big movers in the broader markets.
Yeah, I mean, in the broader markets, I can also pick up a Rashi Peripherals on the back of the acquisition. That stock is seeing some strength in today's day, 6% up move coming in there. On a Bajaj Auto as well, the reason you're seeing pressure is because it's the buyback record date today. So that's the reason why you're seeing that 1.7% kind of a cut coming in terms of Bajaj Auto. Apart from that, you have IRCTC, 5% downtake on the CMD resigning. The news did come in yesterday, and that stock is seeing cuts right now. I think we're seeing 0.3% on the charts right now, but I think my screen is showing me something else. But a KPR Mills, let's pull up that one on the screen. 7 to 8% up move coming in on that one. The pharma pack is very interesting because it's the 5th or the 6th consecutive session, but the gains have continued. And today as well, you have the healthcare and the pharma index, which is the top gaining one. In fact, let me ask Chandan this one. Chandan, from the pharma pack, anything that can see further momentum on the upside from here on?
Yeah, so I like most of the pharma counter. In fact, in the early commentary, I discussed about Laurus Lab, but I'll mention one mid-cap idea as well here. That is the Marksons Pharma, one of the strongest counter, which is all set to give a fresh leg of rally. In fact, on the monthly chart, it formed a rounding formation, making higher top, higher bottom on the daily and the weekly chart. So here we can look for long side of position with support of 263. It can head towards 290 kind of level. Apart from that, as I mentioned, Laurus Lab could be on radar. Counter like Biocon could be in focus. Apollo Hospital and hospital stocks or healthcare stock could be in focus. One can look at the Apollo Hospital with support of 83.80 for upside target towards 87.80 kind of level. So these are the couple of pharma names which can do better, but entire pharma index looks better in this market scenario.
Okay. Very quickly, we'll make that point. You wanted to make a point because this Markson was your pick as well, right? So you want to revise your levels?
Markson Pharma was a weekly pick a couple of weeks ago for a second target of 275. That was also a bump up, because we previously mentioned that with targets of about 240, 245. So on the run, you might want to continue holding on to this stock. In fact, I'll add a few more names, KIMS and Shilpa Medicare. Look at the kind of moves that these stocks made in the market yesterday when we saw that deep gash. The point being that all three of them were weekly picks. They're continuing to do well. KIMS a little soft, but nonetheless, a good momentum in these. So I would keep these on my radar.
Okay. Gentlemen, all of you, thank you so much for taking the time out and being with us. Really appreciate your time this morning and your ideas, of course. Some of them are making wealth for our viewers for sure. Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital, joins in right now on the show. Sandeep, great having you. Thanks so much for taking the time out and being with us. Neeraj here, good morning. I believe you guys had a conference, your annual India Investor Conference in the last 2-3 weeks sometime. Tell us, what has been your view by and large? Was it reinforced at the conference when you spoke to companies as well as your clients alike? And what's the post-conference outlook?
Well, we had the Asia conference, which happens every year in Hong Kong, and we have companies coming in from India and for the entire Asian region. And the outlook, as far as India is concerned, actually was completely benign and, in fact, a bit positive. We didn't see, we are not seeing companies showing any stress in top line growth. We are not seeing banks report any, any issues with non-performing loans with the MSME sector. So I think the sense one got is that for now the business is still strong. I think on a run rate basis we see automobile numbers hold up well. Consumption was also broadly fine. So that's the message I got. But what I, of course, was very interesting was what the rest of Asia is seeing, and the whole focus was AI, chips, and Korea and Taiwan. And the biggest question was, how long will this AI rally last, and whether India can perform this year. So that was the real, interesting part of this conference. But underlying fundamentals of India seem to be holding up well.
Sandeep, so whether India can perform this year or no would be a factor of what the Nifty does, or will India set to have performed even if Nifty were to flatline, but individual pockets do well? I mean, normally people say don't miss the forest for the trees. Is this the time to let go of the forest view and focus on the trees?
Yeah, I would tend to agree with what we are saying. Actually, we are seeing a lot of movement and positive wealth creators below the Nifty headline stocks. So to that extent, yes, I would agree. But, finally, if you look at foreigners or large institutional investors, their exposure is still with the large cap stocks and Nifty and all these large movers. So to say that the market will continue to perform if these indices flatline may be a bit challenging, but that doesn't mean there's not opportunity below the headline stocks. That's the way I see it. But finally, the large institutional index players, so on, will still always look at the Nifty, and comparisons will be made across countries on headline indices.
Sandeep, very good morning. Alex here. So therefore, that begs the question, couple of questions actually. One, if you're saying that the underlying growth, top line growth, and for banks, the asset quality, etc., is looking benign, it's looking good. So therefore, can the argument be made that the underperformance of large cap India vis-a-vis various other countries, because of the favor that AI has found, when that unwinds to a certain extent, which to a certain extent we're already seeing, we'll see that catch-up trade? That's one. And two, is there still room at the broader end? Because we've seen at the index level itself, Sandeep, since the start of April, 25% on the small cap index, 18% on the mid cap index, and much more in the way of individual stocks. Is there still room on the valuation side?
So, I think there are two parts to your question. Yes. So one, whether India will see the catch-up trade. I think India can see the catch-up trade, but in the interim, India will see pressure. We are seeing pressure come through because stocks in the region are coming off. So if there is a broad-based sell down in the US or in Asia, I mean, essentially the US, because if US sells off, then Asia will sell off, and then India will also sell off in the interim. Because on the large cap stocks, there's not still much big valuation comfort, or there's no real expectation of big earnings surprises. What I said was that we are doing fine. That doesn't mean we are going to surprise on the upsides in terms of earnings and fundamentals. India itself has come through a difficult phase on all prices. We've seen RBI cut its GDP growth numbers. We've seen RBI raise its inflation expectations. So net, while India is doing broadly okay, we are not going to be a big surprise. So the catch-up trade can only happen if there's an earnings surprise or there's real valuation, a comfort in terms of the valuations are very cheap. So I would think that in the near term, India will therefore remain in line with the market movements overseas, especially US and Asia. And then if we see real valuation comfort or earnings surprise happen, then we can see earnings, the market start catch-up trade and the reverse trade. As far as mid cap, small cap, yes, but these are very specific and very individual company driven. So to that extent, you need much more due diligence and much more research than some of the large caps, which are known items and have much better quality of disclosures and management. So the risks are higher in these.
Fair point, Sandeep. Let me ask you about your earnings expectations, right? And a lot of people are contemplating what the impact of the West Asia crisis will be on Q1 and what bearing that will have on the rest of the financial year. And I guess to a certain extent, we'll know in the next 2 to 3 weeks, right? At least we'll start to get to know. What is your baseline and what would surprise you on the upside, on the downside?
I think the baseline is around 12 to 14% earnings growth for the reported indices, but the real issue is whether we'll see margin compression happen in especially the reporting which happens in July. The June reporting, will be June margins will broadly hold up because I think the raw material inventory was at lower prices. So historical lower price inventory will come in and probably boost margins for the July quarter. But the July to September and October to December quarter is where the margin compression will come up. So that's what we need to watch for. So maybe, it's not in the next 2 to 4 weeks that we'll see margin and earnings compression come through. We'll probably see after the July-September quarter.
So that's with regards to overall markets. Sandeep, good morning. Hiral here. My question to you is with regards to banks, because we were just looking at what's happened between PSUs and private banks, and your private bank underperformance is something which has continued. What is it that will take the private banking space to actually break out of that narrow range? And to add to that, you need some things that will be done at the global level as well. Like, for example, if you look at the Fed, people are expecting something from the Fed. You are seeing something that will translate into, what the RBI does as well. So overall, what is it that you're watching out for to start seeing private banks move now?
Well, I think the banks sector as a whole is doing fine. The private banks are essentially marred by one large cap bank, HDFC Bank, which has been a large underperformer. So if we see that change, then I think the private sector banks will come through. In fact, everyone thinks that the US should see a rate increase by the end of this year. India may also have to do a rate increase if all around the world we see rate increases just so that India's currency doesn't come under pressure. Broadly, NIMs for banks will actually be in a good place. The loan growth we are seeing across the board come through much stronger than it has been in the last couple of years. So banks' earnings will do actually better than average. The real question is whether we'll see some of the large cap private sector bank names start performing. If that happens, I think the entire private sector pack will also perform.
That's an interesting point that you make, especially when it comes to an HDFC bank, and that's what Neeraj was pointing out as well in our earlier conversations. The other question I have for you, Sandeep, is with regards to where CAPEX goes. Now, if you have to look at the corporate credit growth as well, how is the current pace of the kind of government CAPEX that you're seeing impacting your near-term corporate credit growth? How are you looking at that entire schematics of things play out? Because the West Asia crisis is something did put a lot of things on the back burner. There are jitters amongst, within corporate India as well as to on what direction to go to. So how are you looking at it?
So we did actually a couple of tours also after the Asia conference. We've done West Bengal tour after the change of government. We also did a pharma tour in Hyderabad and Bangalore. And all across, clearly CAPEX plans are still ongoing. There's no big rollback, but I don't think that the entire bank lending growth will be driven primarily by CAPEX. It will still be driven by retail loan growth and private sector and individual loan growth. To that extent, I think as far as the economy holds up, there should not be a problem for banks.
Sandeep, I do want to ask about the earnings and what you referred to when you spoke to me, right? And you answered with regard to your expectations on earnings, and you spoke about margin compression. One of the features of the last few quarters has been the resilience in margins, and in several situations, pretty decent expansion in margins, but the top line growth was in question. Generally, when you have pressure on commodity prices, various other issues coming through on that front, the tendency is to gravitate towards market leaders because of the resiliences
that they showcase, right, in their individual sectors. Is that something that you anticipate will play out in the first and the second quarter earnings?
So I think the large cap can show earnings resilience to the extent that we don't see margin compression. I think that may happen in the commodity sector, which have seen price growth. But I think we'll have to wait and see, and it would be a positive surprise if margins expand in the September-October reporting period. So if we see that happen, that would, at least to my mind, be a positive surprise for the markets. I would still think that there would be some margin compression in manufacturing come through in the second in the July-September period. Definitely, that's what I would expect, because the margin expansion which we saw in June was essentially due to lower priced raw material inventories.
Sandeep, there is one concern, maybe because of the delayed monsoon plus all that's happening in the conflict, so on and so forth, that the second half of the year might see a reduction in demand and finances for the household, for the state, for the center, etc., and therefore consumption may as a whole suffer, and therefore this 18-19% earnings growth being penciled in at the start of the year for FY27 might well come off, independent of the conflict as well. By the way, where are you on this argument, and therefore do you believe that if that were to happen, there is a downside risk to the headline Nifty levels as well, and therefore some of the other sectors might also get pulled down along with?
So we had a conference call with the chief economic advisor, Dr. Nageshwaran, and he said some very interesting points. He says that the fiscal deficit, the government wants to keep it under control and borrowing under control. We've seen these public sector OFSs happen to raise more revenue. India generally has missed its divestment target, but we are actually doing better on a run rate basis for the current year than we have done for a long time. So to that extent, the government is aware of the fact that there could be pressures on consumption, there could be pressures on top line growth, which is what you're asking me. We'll have to wait and see the interplay of factors. Right now, I would not think 18-19% earnings growth happens. I would think 12 to 14% earnings growth happens. And mostly the large cap names, undershoot in terms of earnings. And if that happens, the headline Nifty, as we have discussed in the beginning, would basically be flatline or single digit returns at best. But under the hood, there is still strong fundamentals, strong growth happening in the economy. There's no real large cause for concern. If the physical supply of LNG, of oil, as we now expect and now see, comes into India, most of the pressures that we anticipated, India will be able to tide through by September, November. The real issue is now, how rainfall can hit consumption and agricultural output and broad consumer staple demand. So that's the only negative variable that we need to monitor.
Okay. Sandeep, that's on the consumption side as well, what we need to monitor. My question to you now is in terms of IT. Overall, the word on the street right now is that probably once you see the AI demand, or not demand actually, the euphoria around AI and the global markets tapering to some extent, then is when you will see that momentum pick up in terms of Indian markets as well. Currently, what is your stance if you have to look at Indian IT players, may it be large caps or mid caps? Because it's a very divided view that everyone has right now.
So IT is clearly a pain point for this market. And in the interim, that doesn't change because the entire AI food chain, primarily starting from the hardware suppliers, are making a lot of money. Hand on heart, I don't think anyone exactly knows what is the medium to long-term impact of AI. We have leaders such as Nandan Nilekani say that India will actually benefit. I don't think anyone can, as an investor, I would basically continue to be a bit cautious. I've seen all kinds of meltdowns happen. We saw that happen after the Y2K boom, and everyone said that now there would not be any work. We saw that in the financial crisis in 2008 when IT budgets for banks and financial institutions were being cut, because that's the largest client segment for IT companies. And if they see cuts there, then there's clearly trouble. And now we're seeing the AI-driven issues on the entire IT sector. I would not be as bearish as what the prices are currently indicating. But this is clearly a transition period, and that transition period could well last for the next couple of months. So wait and watch, but it's not completely bad news in my view.
Sandeep, just to follow up to that, and of course, your focus is obviously India, but I do want to ask whether you have an opinion on this global dialogue, and you had people like Ashwant Damodaran weigh in and talk about the entire AI boom and what has happened to risk assets therein, and what the implications are. You referred to the dot-com boom and bust, right? And he juxtaposed the two, and he said that if there is a bust, it would be far worse than the dot-com bust because of the kind of capex spend that people are doing or companies are doing, and they're funding it with debt. If there is a bust, and nobody knows whether this will happen, what are the implications for India, which has missed this entire rally in the first place?
So exactly, I think that's the most debatable and the most important point. As I have said in the beginning, it's going to be Asian markets, US markets, which will decide the headline performance for India. Though despite that, broad economic fundamentals look good. So to answer your question straight up, I think if there's a major bust and there are real financial issues, fiscal issues in the US, then all markets will suffer, including India. So that's what I would think would happen. It's impossible to predict when and what is the extent of this blow up, and if that is something which is long lasting in terms of its fiscal impact. Clearly, in 2008, when there was a major financial crisis globally, every market fell off, and so did India. India did better eventually than other markets, and that's what I would think would happen if there's an AI bust up.
So thank you, Sandeep, so much. Your views are always welcome and always a pleasure to speak to you on NDTV Profit. But moving on, Paras Defense, that's a stock that you should be watching out for from the entire pack. In fact, defense as a sector also, as we're saying, has been in focus. We've witnessed a sharp rally in the recent months. 65% up move that's coming in on the Paras Defense in the month of June itself. And that's mainly driven by optimism around the defense optics business, a strong order pipeline that everyone's talking about. We will speak to Jyoti Gupta, Senior Research Analyst at Ashika Institutional Equities, to talk about Paras Defense and the sector as a whole. But before that, Sharad joins us with a deeper dive in terms of what's happening with the Paras. Sharad, over to you.
Well, Hiral, interestingly, this is just, the euphoria is there for just one product, and that is the periscope for a submarine. And interestingly, India's only supplier happens to be Paras Defense. If you look at the overall momentum in the stock, there has been very strong momentum. The stock is up more than 50% in the last 1 month itself. And tomorrow there is a mega meet of more than 65 investors. Now, of course, this also includes astute investors, fund houses, FIs and DIs, and the street is quite bullish on this important announcement. But the question remains is there a further upside left? Firstly, this is less likely right now. The stock has already gone up. If you look at the 12-month forward P ratio, that's at 90 times right now. Compare that with its 2-year average, that comes in at 57.5 times. Also, the consensus target price suggests almost a 47% negative return over the next 12 months. And also the fourth quarter, we had seen that there was a rising raw material cost, almost 118% year-on-year growth coming in the fourth quarter as well. So maybe the stock has run up a lot and valuations are not attractive at all.
Interesting. Thanks so much for getting us those details on Paras Defense. But to talk about the space as a whole, we're joined by Jyoti Gupta, Senior Research Analyst, Ashika Institutional Equities. Jyoti, thanks so much for taking the time. Always a pleasure speaking with you. Let me ask you about what you make of the space, right? Because in the recent past, you've seen orders come through. You've seen greater intent from the perspective of the government to float defense orders to the private sector players, right? What are the implications of that, and what are the numbers that you have been focused on this year?
Are you asking? Good morning, and thank you for having me on the show. So is it about the industry that you're looking at?
Yes, that's right. We'll delve into individual counters post that. I wanted your view on the sector as a whole first.
So see, I am structurally very constructive on the sector. It's no longer cyclical. One is the huge order book gives you multi-year revenue visibility. And, in terms of private participation, which was 20% in FY 2020, has actually gone up to 24%, and I believe this will increase to 30% by FY30, maybe more. In terms of export, we've closed the year FY26 with 24,000 crores, and I think the government has kept a target of 50,000, but I think we should easily cross 75,000 plus crores of exports by FY30. So overall, the industry does look good. Second is that you are no longer looking at we're looking at orders which are technologically driven orders, and we are no longer looking at repairs. It's a full platform based orders which are coming through. So obviously the revenue visibility is quite high for the sector for the next 5 years at least.
So when you drill down into that, Jyoti, though, and there are a few interesting platforms that are being spoken about, but there's also ordnance. There's also the BrahMos missile program. So, and there's interest from various countries around the world, for example, in some of the armaments that are being created. So there's one aspect which is the regularity of the income that might be expected, because one would assume that armaments would yield you more regular income as compared to some of the platforms which would have a very long gestation, and the export side. So is that giving you comfort with regard to the revenue visibility for some of these companies?
See, when you look at something like BrahMos missile, possibly the revenue visibility would be anywhere between 24 months to 36 months. And what we should not look at BrahMos as just just an order value. It is, I think it's our world's fastest operation supersonic cruise missile, and the export order from India means growing technological capabilities and geopolitical acceptance as a trusted defense partner. I think if this BrahMos deal goes through, it means we know that GCC is a large defense spending region, and a successful deal with UAE could open opportunities across the GCC countries for Indian defense manufacturers. Apart from that, when you're looking at platforms, you're looking at submarines. Submarines have a life cycle of 5 years. So a complete production life cycle would be 5 years for submarines. For aircrafts, could be around 5 to 6 years. But now, if we look at LCA Tejas, it should not be more than 6 months, because the first 6 aircraft should get delivered by August. And let's say if the next lot of 12 aircrafts have to be, of course, contingent upon the availability of GE engines, it should be delivered by March 27, because we already have 30 aircrafts already completely, the aerostructures are ready. So what I mean is the revenue visibility in terms of platforms would depend on the timelines. So your missiles could be two years, submarines could be 5 years, aircrafts would be anywhere between 6 to 9 months. So that's how it is. But if it is with aerostructures and engines, then it could become 12 to 14 months.
Okay. Jyoti, good morning. This is Hiral on this side. You mentioned about a couple of benefits that you would see as well. Now, apart from BrahMos UAE deal, you're also talking about a BrahMos deal that could be struck with Vietnam, and that's what a couple of media reports were indicating last week. To add to that, you have Akash Tir also, which is coming in. Now, yes, a couple of your private players now become beneficiaries because the sector has opened up, because initially there was a lot of concentration that was going to the PSU side of the business. If you have to specifically look at a Paras defense, as we know, it does also benefit from BrahMos. With the kind of upside that has come in the month of June, how would you look at a Paras versus the other private players? And if someone who's invested in Paras, would you say to book profits and switch to another defense player?
Okay. First of all, we cannot compare Paras with most other companies which are in the market. This company has a significant market share in telescope and homegrown periscope, which I don't think so you don't have close competition there. Second thing is the optics division maintains margin, which is in excess of 60%, significantly higher than the company's average. Then the company's moat appears relatively durable, and this could strengthen significantly because it is a precision optical manufacturing and company, and it requires ultra high accuracy machining, specialized polishing, optical coating, system integration, defense qualification, years of customer validation, and these capabilities cannot be replicated quickly. So once an optical supplier is qualified for a platform, switching suppliers is expensive and risky. And this also creates a sticky relationships and repeat orders. So in fact, this is not only with Paras, it is across most of the companies which have developed a certain capability. The government also doesn't want to onboard to replicate that capability. In fact, they would prefer the companies to come up with an add-on feature or something, other than what the company is already doing, because the entire onboarding process for the same, capability is expensive. So even the government is not actually encouraging, to replicate capabilities which already a company has done.
That's an interesting point, Jyoti, that you make. So then, if you have to look at any of the other companies right now in terms of valuations, we'll come to the pecking order, but continuing with the Paras from the link that, what my colleague brought to us as well, the stock is trading at rich valuations, number one. Your forward P is at 90 times versus an average of 57 times, last 2 years average. And if I'm looking at the consensus, what analysts have on a Paras defense, it's giving you a negative return of nearly 47% that could be on the cards. If you have to look at this aspect, how are you looking at it? Do you think it's still a viable investment opportunity?
So first thing is, I don't think anybody covers Paras as in hard coverage, which we do. Second thing is, the company expects to double its current. What I would actually look into this company is, one, the order book, which it intends to double, potentially reaching to somewhere around 2,000 crores, minus the deliveries. Second is, I would look at ISRO contract, the conversion of 2,500 crores, inactive bids from ISRO into firm orders. The company is actually expecting a significant potential exponential hike in space mission orders to begin within next 4 to 6 months. Then the subsidy approval and pay for OSAT, which is outsourced semiconductor assembly and test facility, which is conditional upon receiving 80%, total subsidy, which is 50% from the central government and 30% from the state. See, what we need to understand is that, apart from this, there's a huge demand which will come from this massive requirement for almost 6,000 units of control systems for armored vehicle upgrades and new platforms like FRC and FC. Now, this will feature fully stabilized cameras, making them a major production driver for Paras. Now, if you look at Paras order, their current order book gives me a very healthy near-term revenue visibility. Now, optical systems and electro-optics is a platform agnostic technologies, across applications, with applications across anti-drone detection, tracking, laser-based neutralization, integration, electro-optic payloads. In space, you would look at satellite. There's so many, and this sector, this particular, segment has high entry barriers and limited domestic competition. So obviously, I would be positive on the company. Near term, of course, the valuations look rich.
Yeah.
But FY30 definitely looks good.
Yeah, absolutely. So, Jyoti, unfortunately, you have to cut it off with that, but I'd love to touch base again to talk about the rest of the space and how you view it. But thanks so much for taking the time.
Thank you, sir.
All right, so to quickly go across to the management of City Union Bank joining us right now, set to raise over 500 crore rupees via QIP, and to talk about what the utilization of these funds is going to be for and the outlook for the rest of the year. We're joined by Vijay Anand Ramamurthy, who's the Managing Director and Chief Executive Officer of the bank. Mr. Ramamurthy, thanks so much for taking the time. First, this is obviously a fundraise. It will add to the Tier 1 capital. What is the plan here?
Good morning. Thanks a lot. It's just an enabling resolution. We have been taking this since 2009. We have utilized only once in 2013 or so. It's just the enabling resolution we have taken, and it's more of a formality.
Okay, so it's procedural. Where does the Tier 1 capital currently sit at, the CAR? How does it stand?
We are almost at 21.5%, as you would be aware.
So
now I need much capital.
Yeah, very, very comfortable from that perspective. Can you give us a sense of what the situation is on the ground? Because everyone is taking notice of the fact that banks are resilient on the asset quality side. But the real question is, how has the credit side moved? What are the signs that you're seeing, sir?
The growth is stronger. In fact, the portfolio has been behaving very well. I think whatever the MSME performance has been exemplary. We did not see much. I can speak only basis the numbers what we have got. I think the numbers are looking phenomenal in terms of portfolio behavior. And in terms of growth, I think our asset quality growth has been pretty good. The growth is stronger. The margin looks decent, and looks like we are as per the plan.
Mr. Ramamurthy, good morning. We were talking to an expert who did a lot of on-ground checks and suggested that despite the conflict, the asset quality, the disbursements, etc., have all stayed okay, predominantly for large banks and housing finance companies, but he extended that argument to well-run mid-sized banks as well. I would love to know, what is your experience been for what was arguably the troubled quarter, which is April to June?
Absolutely bang on. The portfolio behavior has been phenomenal. As you would be aware, we closed last year with SMA 012 at 2.5%. And even this quarter, we are running at the right direction. I think the asset quality has been phenomenal, and the bouncing back of MSME has been excellent. And over and above that, the ECGLS rolled out by regulator is absolutely fantastic. This is helping the MSME sector in a big way. As of now, the figures are quite comfortable. I don't see much disturbance on the portfolio behavior as we speak.
So here's the question, sir. Most people say that even on the earnings front or the growth front, we were doing very well as a country, but for this conflict to come in. Now that it's showing signs of receding, and if during this quarter as well things were good, can things become better in the next 3 quarters, or do you foresee a bit of a consumption slowdown ahead?
I'm quite optimistic on the growth because if we have managed this crisis well, and there is a good demand on MSME, I think I'm quite confident and optimistic for the next Q2, Q3, Q4 as well. I don't see much issues because the growth is stronger, as I said a couple of minutes before, and margins have been stable. We don't see much issue. We are quite optimistic on this front.
Okay.
And whatever we are speaking is as per the figures what we have got. I think this is quite good, encouraging.
Absolutely encouraging. And we'll speak very soon, Mr. Ramamurthy, to talk about your Q1 results. And I'm sure that we'll have a more detailed conversation at that point. Thank you so much for taking the time.
Thank you. Thanks a lot.
All right, we have to slip into a very quick break. But on the other side, we've got the address by the chairman of the Adani Group, Gautam Adani, lined up for you. It's the 34th annual general meeting of the Adani Group. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen,
bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to India Market Open on NDTV Profit. Let's quickly pull up what's happening with the markets as well, because we did open up with slight cuts, but there you go. We've come back to around 23,850, but probably trying to inch higher towards that 23,900 mark right now. Let's pull up Bank Nifty as well and see what's happening on that front along with the broader markets, because it's the small cap index which was slightly more resilient. Very similar moves in terms of Bank Nifty as we speak, and in terms of broader markets, you're seeing the mid cap 150s trading with cuts of nearly 0.4%, and likewise the small cap 250 as well, seeing slight bit of pressure down almost 0.5% in trade. It's very interesting to see what's happening with the Honasa consumer. Now, they've entered the fast-growing nutraceutical market through the acquisition of a majority stake in Fluence Pharma. That stock now almost near the day's lowest levels, with cuts of 3% coming in there. My colleague Mahima joins us with more details. Mahima, I mean, overall, at the face of it, it seemed that the acquisition seems to be positive, entry into the nutraceutical space as well. But I think the street is not very happy. Stock down nearly 2.5–3%. Anything that is negative that you're picking up as to why you could see pressure?
Right, so I think more than negative, I think, Hiral, it's not per se a very big acquisition that will add to its top line. If you take a look at the acquisition, it's just 1.7% of their FY26 revenue and just 3.6 times its FY26 EBITDA. So that's probably the reason as to why the street has not paid much attention to it. Overall, yes, it's a 135 crore acquisition. Fairly valued in terms of 3.4 times price to sales. But overall, they've decided that they'll acquire 58% right now and 42% in the next 5 to 7 years. Just that this company is into science-backed nutraceutical products and has patented clinical nutrition therapy products as well. Has strong dermatologist-led distribution network as well. Right now, it's in B2B, but going forward, using Honasa's distribution, it is going to be expanding into the B2C area. Overall, sales CAGR has been around 7.5%. This is between FY23 to 26, and EBITDA margin is healthy at 20%, which is better than Honasa, by the way, at 10% in FY26. This is important because we've seen significant rise in terms of where this entire TAM goes for nutraceuticals, especially beauty from inside, and the estimated value of this TAM is at around 16,000 odd crore, and a lot of FMCG companies lately have gone ahead and acquired names in nutraceuticals. For example, HUL acquired Oziva, Marico acquired Cosmix, Plix, etc. So that's why it just makes this acquisition an interesting one, because FMCG now is focusing in this segment as well.
All right, thanks so much for that. And it's come off just a tad bit from the low point of the day, but still languishing in trade, down about 2.5%. But this is par for the course. Looking at the way that the broader markets are doing, Hiral just pointed that out to you. But I would like to pull up the advance decline ratio chart as well. The line graph, which will tell you that the switch has happened not too long back, and you have advances that have slipped now below the declines. It looks like it's going to be a pretty eventful session. But if you look at the broader market, markets and take a look at the stocks that were buzzing early on, there are a few that stand out. From the losing end, you have IRFC, that's obviously reacting on account of the OFS that has been announced and the pricing of it, 7.7% discount to yesterday's closing. You have Gujarat Gas that's losing ground, GT&D, Hitachi Energy. We spoke about these power equipment related companies as well. Siemens as well losing ground, nearly 4% or thereabout. Certain questions being raised about the sustainability of margins. KPR Mills, though, on the other end of the spectrum, doing particularly well, up as much as 13%.
You know, what's interesting right now is we were talking about the advance decline ratio, but in consonance to that, you look at the markets. You are seeing they're trying to make that mild recovery as well. So don't be surprised if again you see the advances taking over the declines, and that's what if the charts are also indicating. After that switch, again that gap is narrowing down, and if you see the broader market, especially the mid cap and the small cap indices, as Alex was pointing to, there is a possibility that that switch could happen, but the advances take over the declines because of that recovery that potentially could come in as well. So that's going to be the interesting aspect to watch out for. But apart from that, let's just quickly pull up a Syngene as well on the screens and see what a Syngene is doing in trade. You know, Alex had highlighted the Macquarie note. That stock is now seeing marginal gains of around 0.8 to 0.9%. And along with the Syngene, you have a Biocon also that is in focus because their Malaysian counterpart has got some decent orders, but nothing happening in terms of Biocon. You know, one stock, Alex, New India Assurance, from the time the NSE DRHP was filed, was on a tear.
Yeah.
Just look at the kind of performance. If you just pull up the 1 month chart, you'll see the kind of gains that have come in the last 5 to 7 trading sessions. In the last 1 week, 16 to 17% is the kind of upside. But there you go. I mean, strong moves as well that we've seen on this counter.
Yesterday it dropped 8%.
Profit booking has started. Today, the downtick continues with cuts of 3.5% coming in there. Sharad joins us with more details on this one. Sharad, a deeper dive into this, because that has been one of the modes or one of the triggers that we had seen in terms of New India Assurance. However, with the way business has been panning out, is there any further upside momentum that remains in the New India Assurance? What are details actually indicating? Over to you.
Well, Hiral, you are right. The further capping of growth we can expect, especially in the recent run-up which we have seen for New India Assurance. But let's see how the rally has actually panned out. And now we are seeing that has actually snapping. It's a gaining streak. The stock was up almost 45% in the last 7 sessions. Stock is trading at its nearest 52-week high levels. 2 days of correction, but still above 80% in FY27. NSE stake has driven this surge. Of course, this is the biggest value creation. But remember, this is happening on its books as well. It has not been realized yet. They have almost 1.42% stake. Now that's valued at 2,100 crore rupees. And if we take the unlisted price, it's ranging between 1,900 to almost 2,000 odd rupees. And they had acquired NSE shares at just 32 paise. So of course, there's a massive wealth, created by NSE. And currently, they are trading at around 2,000 rupees in the unlisted market. But the story remains is overall, are the operational parameters doing really well, or is there some overhang in FY26, especially on the underwriting? That's what we will actually talk about. And moving on, if you look at it, these are the important numbers also. A little bit of concern definitely coming in the FY25, but some reversals happening especially in FY26. Also, the investment book is driving the story. The investment portfolio has reached 1 lakh crore mark, and this income is now almost, you could say, 1/4 of the overall premiums. Now, the strong equity markets have boosted the earnings sharply. This is nothing but a treasury kind of a move, and now the NSE stake also gives in a good important booster on their books. But what's the underwriting portion? That's the missing piece, and that's where the concern comes. This has deteriorated in FY26. If you look at the other sectors also, the motor and the aviation, that losses has weighed in on profitability. And also, third important point, and that's also a kind of an overhang for the stock, is the insurance operations that has remained under pressure. So the core business is not doing that well. But of course, on the treasury and the NSE stake, that is where the driving is happening of most of the stocks. So this is the entire picture for New India Assurance. But definitely, one side it's the NSE stake, the other side, the business operational parameters are not that good.
Absolutely. In fact, if you see in terms of the consensus price also, that's around 170. A return potential of 20% is what the ANR is indicating. You have JP Morgan, which has downgraded the stock to a neutral, and a HDFC Research has maintained an add on the counter. So it's going to be interesting to watch out for what happens to this one. But moving on to an exclusive conversation, ESAF Small Finance Bank. Let's pull up that one on the screens and see what's happening. Before we do that, let's quickly go across to the annual general meeting of Adani Group. We have the chairman speaking.
Welcome to the 34th annual general meeting of Adani Enterprises. There are some years in a group's history that are more than milestones. They become defining years. Years that prove the strength of conviction. Years that demonstrate the power of resilience. Years that reveal the difference between those who wait for clarity and those that build through volatility. FY 2025-26 was one such year for your group. It was a year in which the world grew more fractured. Complex energy security models returned to the center of national strategy, and technology became inseparable from sovereignty. However, even in the face of these challenges, your Adani Group remained anchored to an unwavering belief India's future cannot wait. While others debated, your group built, advancing its journey as the world's most integrated infrastructure platform across energy, transport, logistics, utilities, and industrial manufacturing. This progress did not come in a calm conditions for us. It came in the middle of extraordinary scrutiny. However, we did not bend. We did not pause. Because what we have always been defined by is not the noise that surrounds us, but the strength of our response. Not the intensity of the challenge, but the clarity of our purpose. Not the criticisms, but the nation building we intensely to believe in. Just one example of this belief was our rupees 25,000 crore rights issue earlier this year. This was more than a capital event. I saw it as a referendum on our credibility. It was one of the largest rights issue in the history of India Inc. And your response was very clear. At a time when some tried to create doubt, you answered with convictions. You responded with a participations, and you provided us the mandate to help keep building India. And true to this spirit of a nation building, the theme of my address this year focuses on accelerating infrastructure, leveraging intelligence. These are no longer two separate priorities. They are the twin global engines that must shape India's strength, secure India's sovereignty, and accelerate India's journey to becoming one of the defining powers of this century. The first engine, infrastructure, is the roads, ports, airports, transmission lines, power plants, renewable parks, gas networks, logistics platforms, cement capacity, water systems, and industrial ecosystems that make national growth possible. The second engine, intelligence, is data centers, the use of AI, automations, predictive systems, digital platforms, real-time analytics, and machine-led decision support to make every one of these assets more responsive. Infrastructure gives a nation muscle. Intelligence gives a nation mastery. And today, the two are inseparable. We are now one of the very few global companies that are not reacting to the future, but are prepared for it. The fact is that we have been positioning for this day since years. We saw early that the world was entering a new era, one where geopolitical fault lines would deepen, supply chains would fragment, and energy security would return as a strategic priority. We saw that the race for technological leaderships and sovereignty would be constrained not by ambitions but by infrastructure. Allow me to elaborate. Our strength lies in the way our infrastructure pieces connect. From mining and power generations to transmission and distribution, to ports and logistics, to data centers and fulfillment centers, and roads to water, we have the ability to connect every critical layer of infrastructure that is needed to power the age of intelligence. Let me begin with a few numbers that capture the scale of what we are building. In FY 25-26, we made a record capital investment of more than rupees 1.5 lakh crore in hard infrastructures. To put that in perspective, this represented over 30% of India's total new private sector capital expenditure of the year. For us, this is more than a financial number. It is a statement of belief, and there can be no stronger testimony to our commitment to nation building than the scale at which we continue to invest in the infrastructure that will power India's next chapter. So let me shift to a few tangible examples of what we delivered over the past year. At Adani Energy Solutions, our transmission order book rose to rupees 72,000 crore. We secured several major projects, including the Khavda South Olpad HVDC line, reinforcing our positions as India's only private sector player with a proven HVDC capability. At Adani Power, we are implementing India's largest ever private sector power capex program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years. We are also honored to be partnering with the government of Bhutan's Druk Green Power Corporation. As a part of these partnerships, the Adani Group and the DGPC will jointly develop 5,000 megawatts of hydro projects in Bhutan. Our entry into nuclear energy through Adani Atomic Energy is another confident step towards securing India's long-term energy future. With land identified and a 10 gigawatt targeted capacity by 2035, we are positioning ourselves early to serve the growing national demand for clean, round-the-clock power. At Adani Total Gas, we accelerated and crossed the significant milestone of over 1.1 million piped natural gas home connections. Given the current geopolitical situations, we are further ramping up our PNG projects to meet India's rising demand for more accessible gas. Coming to connectivity and logistics, Adani Ports handle over 500 million tons of cargo in financial year 2025-26, setting an unmatched benchmark for the nation and creating a clear pathway to 1 billion tons by 2030. Our integrated network of ports, SEZs, logistics assets, and expanding maritime services places us in a unique position to keep gaining market share while lowering the cost and complexity of India's trade. I am proud to specifically say that Vizhinjam, one of the most strategic ports on the global maritime route, delivered a record first year by crossing 1 million TEUs. This is the fastest pace ever achieved by any Indian port and a strong signal of India's arrival on the global transshipment map. In airports, we achieved two defining milestones with the opening of Navi Mumbai International Airport and the new integrated terminal building at Guwahati airports, both inaugurated by our Honorable Prime Minister. Earlier this year, both these airports made it to the list of the world's 7 most beautiful airports. The commencement of operations at Navi Mumbai Airport in December 2025 also marked a proud moment in India's aviation landscape, with a 90 million passenger capacity airport built in a world record time of just over 4 years. In digital and industrial infrastructure, our data center business is firmly on the path to building a 3 gigawatt platform by 2030. The binding MOU for a gigawatt scale data center with a Google in a Visakhapatnam reflects both the scale of the digital demand ahead and the confidence that global technology leaders such as Google, Microsoft, Uber, and Flipkart are placing on us. Across our mining services business, 4 new MDO agreements took our capacity to a record 145 million tons per annum, thereby further consolidating our positions as India's largest private miner and helping secure critical resource flow for the broader industrial economy. At Adani Cement, we contributed to iconic national projects ranging from the Chenab Railway Bridge to Navi Mumbai International Airport and the Umyadham Foundations in Ahmedabad. Over the past year, our cement platform expanded significantly, with total capacity increasing to 110 million tons per annum. In defense and aerospace, our ambitions became even bolder. Our partnerships with Leonardo and Embraer are helping lay the foundation for integrated helicopter and regional aircraft manufacturing ecosystems in India. We are building a national aerospace platform that spans manufacturing, MRO, services, and pilot training. I'm also privileged to say that during Operation Sindoor, our drones, anti-drone systems, missiles, and ammunition supported our armed forces when it mattered the most. Now coming to our financial performance, FY 2025-26 was another year of disciplined growth and strong executions for your group. Our consolidated portfolio revenue stood at rupees 2.92 lakh crore, thereby reflecting a year-on-year growth of 7.4%. EBITDA reached rupees 94,834 crores, with the net debt to EBITDA ratio at a healthy 3.3x, thereby demonstrating the strength and resilience of our operating businesses. Profit after tax also rose by 13.9% to rupees 46,376 crores, while our cash flow stood at rupees 67,995 crores. These record numbers gives us the financial strength, liquidity, and confidence to fund our ambitious capex plans and continue building at unmatched scale across India's core infrastructure sectors. Let me therefore speak about the three foundational steps we are taking to build the organizations that will execute our vision over the next decade. First, we are simplifying the way we work. We are putting in place a three-layer structures across both our headquarters and our sites to reduce bureaucracy, sharpen accountability, and bring decisions closer to executions. Every role, every processes, and every layer must add value. Non-core activities will move either to our GCCs or to nominated partners. Second, we are changing the way we work with our contractors. We see them as a long-term partners in nation building. We will build deeper, more stable partnerships where their growth is supported, their margins are protected, and their interests are aligned with ours to help us deliver projects with a greater speed, quality, and ownership. Third, And most importantly, we are placing worker dignity at the heart of our transformations. Across our own and contracted workforce of nearly 4 lakh people, almost 85% are people who work on the ground at our sites. They are the people who turn our plants into reality. And we are committed to ensuring that every worker is treated with a dignity. This means clean living conditions, hygienic food, access to medical support, safe working environments, and fair wages paid on time. And this belief does not stop at the boundary of our businesses. It extends into the communities we serve, the families we touch, and the futures we help shape. That is why, alongside the growth of our enterprise, the Adani Foundations remain central to our purpose. The foundation currently reaches about 10 million people across 7,000 villages and 22 states, and as it enters its landmark 30th year, the foundation is deepening its mission with unprecedented scale and convictions under the able leadership of Dr. Preeti Adani. In healthcare, we are building one of India's most ambitious rural vision care model ecosystems in Bihar, combining all aspects of affordable eye care. Through the Adani University of Higher Education and Research and the Gujarat Adani Institute of Medical Sciences in Bhuj, we are now also creating centers of excellence in affordable healthcare educations and delivery. Alongside this, Adani Health City marks a yet another defining step in our healthcare journey. With integrated health campuses coming up in Ahmedabad and Mumbai to bring together 1,000-bed multi-speciality hospitals, medical colleges, transitional care, and research facilities. Coming to skill development, we are skilling more than 1.2 lakh youth across rural India, turning aspiration into employability and employability into dignity. This year, we moved from training as an activity to training as an industrialized capability, delivering tens of thousands of training hours and strengthening workforce readiness. Also in Kutch in Gujarat, our adoptions of ITIs under the Karma Utsav initiative is creating a powerful local employment engine reducing talent migrations. Therefore, when I look at our journey, I see one integrated purpose: to build infrastructure that powers India and to build institutions that ensure human dignity at every level of society. This is the spirit with which we now step into the future, and so allow me to end with some words of gratitude. To our shareholders, thank you for your trust, your patience, and your resilience. You have stood by us not only in moments of achievement, but also through periods of intense scrutiny. Your faith is our strength. To every Adanian, you are the heartbeat of this enterprise. Every port we operate, every airport we run, every transmission line we build, every data center we imagine, every road, mine, warehouse, power plant, and project we deliver carries your discipline, your courage, and your pride. To our partners, lenders, and communities, we are humbled by the trust you place in us. Scale is never built alone. It is built through collaborations and a shared belief that India's rise is larger than any one institution. To our families, you carry the burden behind our public achievement. You give us the strength to stay grounded and the emotional foundation to keep building. And to India, we remain deeply grateful for the privilege of serving our nations whose greatest chapters are still being written and whose most defining pages are yet to come. And as this India takes shape, allow me to say this not in the language of business, but in the language of our nation. हर ईंट में सपना, हर धड़कन में विश्वास, हर ईंट में सपना, हर धड़कन में विश्वास, भारत की हर सुबह रचे नया इतिहास। सपनों की यह पूंजी, संकल्पों का यह गान, सपनों की यह पूंजी, संकल्पों का यह गान, मिलकर हम गढ़ेंगे एक सशक्त हिंदुस्तान। So let this be the year we are remembered for what we built. We built when it was hardest to build. We believed when it was hardest to believe. And we proved that resilience is a way of life for us. Yes, the future will demand more ambition, more discipline, and more executions than ever before. But together, we stand ready to build, ready to serve, and ready to help shape the India whose greatest days lie ahead. Thank you. Jai Hind.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertising. and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Welcome back. You're watching NETV Profit. This is Ask Profit, a show that gets all your stock-related queries answered. I'm Mahima Vachar, and with me is Puneet Zaveri. And for viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that will be flashing on your screen up there. While you do that, let's take a quick look as to how the markets are doing. The Nifty 50 is trading 0.5% higher, around the 23,950 odd levels, trying really hard to reach those 24,000 levels as far as the Nifty 50 goes. Let's try to pull up the heat map also quickly. The IT names are back in the green today. You have something like Tech Mahindra doing fairly well, Infosys, etc., trading 2% higher. But Dr. Reddy's, ICICI Bank, Interglobe Aviation, as well as Adani Enterprises, all soaring high and up about 2% each. But on the flip side, you have Bajaj Auto, which is down 1.7%. Your life insurance companies, both HDFC as well as SBI, Maruti Suzuki, continues to be under pressure. Let's try to pull up the mid-cap 150 and the small-cap 250, because the pressure today is in the broader end of spectrum. The mid-cap 150 is almost flat, but still down by about 0.05%. So is the small-cap 250, down by about 0.2%. And the advanced decline ratio tells you as to how that chart is faring. You have around 1,300 odd declines versus that of 1,200 odd advances. So that's with regards to where the broad end of spectrum goes, underperforming the benchmarks as we speak. So that's with regards to where the markets go. But let's start taking your stock-related questions, and to answer them, we are now joined by Amit Goyal, who is a CMT, SEBI research analyst, registered analyst, partner, and co-founder at Blue Oak Wealth, and Gaurang Shah, senior vice president at Geojit Investments, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start by taking the first question, which is on Godavari refineries, and this is from Charan, who's writing us from Bengaluru. He's got around 500 shares at the levels of 290. He says he's a long-term investor, whether he can continue to hold and maybe add more at the current levels. Gaurang, good morning to you. What would you recommend?
Morning, Mahima. Thank you so much for having me on your show. Good morning to all your viewers as well. A small disclosure, all recommendations that I'll be sharing with you this morning on your show, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interests by default. So, Mahima, the problem with such stocks associated with refining or anything to do with crude oil or otherwise, they have a tendency of being volatile given the kind of current situation that we are into. Once upon a time, crude oil prices were $100, $110 a barrel, and now they are sub $80 a barrel, close to about sub $75 a barrel to be more precise. And the possibility of more Iranian crude oil coming into the world commodity market could possibly have its problems. So, and along with that, of course, on Godavari biorefineries, unfortunately, we don't have any specific comments. My sense, if you ask me, though this is not a recommendation, getting into financials would make sense. And if I have to recommend one particular stock over here, Federal Bank would be a better investment idea from a long-term point of view.
Got that view. So viewers, you got a view, a free tip as well from Gaurang just right off the bat in terms of financials. But the next question coming in from Vijay, he wants to know a short-term view on Fortis Healthcare. And let me also welcome in Amit Goyal. Amit, very good morning to you. Thanks so much for joining in. What's your view on Fortis Healthcare right now on the charts?
Hi, good morning, and thank you for having me here. So Fortis Healthcare as a sector has been doing well. It is in a breakout sort of a technical formation, the broader healthcare sector as well as the pharma. So Fortis Healthcare, if I have to speak specifically, it has been making higher lows. Right now it is in between 1,000 and 940 range. and the structure is positive. So any dips towards 900, 940, 920, 940 levels would be a good opportunity to pick it up for possible targets of about 1,050 and 1,100 also.
Got it. Well, let me go across and take the next caller from Andhra Pradesh, and Prasad is joining us for a stock query. Prasad, very good morning to you. What's your query?
Sir, good morning, sir. My query about some other Sumi wiring.
Uh-huh.
I'm holding 1,100 shares at an average price of 47.
Okay.
Is it right to exit or hold, sir, for long to short term?
Got it.
Short term to long term.
Got it. Prasad, let me go across and take it with Gaurang. Gaurang, for Motherson wiring, slightly elevated levels in terms of, I think the EPS is roughly around 1.1. So, would you recommend Prasad to still continue holding average down or switch to some other play in the auto ang space?
So, Samar than Motherson, thank you so much, Puri. Good morning to you as well. So, Samar than Motherson is something that we have a positive coverage on. Unfortunately, on Motherson wiring, we don't have a coverage, so I won't be able to give you specifics. But let me say this. If our view, which is very strong as far as the entire auto ANSI sector is concerned, Puneet, if auto has to do well, then auto ancillary related companies, OEM segment, tire, battery manufacturing companies will do well. We would rather look at, even if we look at the balance sheet and the growth prospects, then Samadhan Motherson is something that we are extremely positive on. Though this is not a direct recommendation, but there are better alternatives.
Well, got that view, Gaurang. But, viewers, stay tuned. We'll just take a very short break. Coming back, we'll start with the first round of the rapid fire, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut,
Welcome back. You're watching Ask Profit right here on NDTV Profit. Let's start the first round of the rapid fire in this edition of the show. Gaurang as well as Amit, keep your answers as short as possible so that we can take as many queries in the next 3 to 4 minutes. First question coming in on Acme Solar. Our viewer is holding shares at 241. Gaurang, he wants a long-term view, if not on the name, if you have coverage on what you like in the industry.
So we are positive across, as a matter of fact. Premier Energies, Vari Energies, so on. These are some of the names we are positive on, and I think the entire sector looks quite positive. Don't have specific coverage on Acme Solar, but yeah, it is one of the decent players, if I can put it that way, in this particular sector. Renewable.
Okay, the next one's on Forging. Lalita from Chennai is holding 100 shares at the levels of 676. Amit, a good hold for the next 6 odd months?
Let me just pull it up. I have not seen this, but yeah, it has. Yeah, I got it. It has a good. It has formed a good base. While the overall structure is strong, it has a good base about 429. We could, hold on to it till it invalidates 430, 429 levels.
Got it. Well, the next one's Vikram Solar. Ria from Bengaluru is holding shares, but she's currently at a 12% loss. Amit wants to know in the next 1 to 3 month view on the charts.
The structure is weak. I would suggest, switch to something else in this segment.
Okay, Gokuldas Export is the other one. Our viewer has bought it from a medium-term perspective. He's bought around 771 shares and wants to know whether he can continue to hold this. Any view on this, Gaurang?
So positive on fallback of the export opportunity, no specific cards.
Indocount bought by Raja at 297. Gaurang, if any coverage or something that you like in the textile space?
So Wellspun Living is something, Puneet, that we are positive on, but at that textile sector looks to be quite positive on fallback of opportunities.
Okay, the next one that we have is on ITC. Sriram Raghuraman is holding 100 shares of ITC at the levels of 203. From a 1 year perspective, continue to hold, Gaurang?
Extremely positive, but extend your time horizon.
Advent Hotels is the next one. Ansh from Australia is holding shares at 147 and wants to know a 3 month view, Amit. What do the charts suggest?
Weak. If it invalidates 120 levels, exit.
Okay, the next one that we have is coming in on AIA Engineering. Our viewer wants to know if from a 2 to 3 year perspective, is this a good counter to enter at the current levels? Gaurang, any view?
We used to have coverage, targets are in place, stock is under review, but a strong player.
Grow bought by Narayana at 194. Amit, he wants to know if he should continue to hold his position or exit now.
Hold.
Okay, the next one that we have is on NHPC. Shankar from Bengaluru wants to buy 1,000 shares. Is this a good time to buy from a 1 month perspective, Amit?
You could, with invalidation levels below 76.
Finotex Chemicals bought at 25 rupees by Sharath from Mysore. He wants to know a long-term view on the stock. Any view, Gaurang, on the stock sector?
Prefer names like Tata Chemicals, Vinity Organics, PI Industries. Don't go for lower digit stocks. They are a trap.
Okay, the next one is coming in on Cipla. Abdul Rashad from Palakkad wants to know a 6 months view, target and stop loss on this one. Amit?
Positive on this. Invalidation levels are 1341. In fact, we have given a call yesterday also on the channel.
Bank of Maharashtra is the other one. A viewer, Reenu from Bengaluru, is holding shares at 66, Amit. Booked some profit last week at 86. Asking if this is a good level or should she wait for some more time before booking?
She should wait for some more time. If it invalidates 84 levels, then exit. Otherwise, hold for longer, trail for bigger profits.
Got it. Well, that was the first round of the rapid fire in this edition of course, Ask Profit. But let's start and continue taking your stock-related queries. We have a caller now from Mohali. Arun, dialing in for a stock query. Arun, very good morning to you. What's your query?
Good morning सबको. SBI Life long term के लिए मैं 100 शेयर खरीदना चाहता हूँ. Is it right time to buy now?
और आपके पास अरुण जी कोई और लाइफ इंश्योरेंस नेम पोर्टफोलियो में है या ये पहला होगा?
ये पहला है जी.
पहला है जी. ओके. गौरांग, SBI लाइफ पे आपका लॉन्ग टर्म व्यू क्या है? बिकॉज हमने देखा है कि जनरल इंश्योरेंस साइड पे स्टॉक परफॉर्मेंस काफी कंपनियों का अच्छा नहीं रहा है. लाइफ वालों में SBI वन ऑफ द लीडर्स. डू यू थिंक दैट अरुण जी को ये बाय कर देना चाहिए अभी?
पुनीत, जनरल में भी एक कंपनी है जिसने अच्छा रुझान दिया है, वो है ICICI लोम्बार्ड.
वो एक ही है बस, अनफॉर्चुनेटली.
लेकिन बीमा से जुड़ी हुई कंपनियों में रुझान थोड़ा नकारात्मक रहा है. लेकिन हमारी सोच और विचारधारा ये है कि इंश्योरेंस से जुड़ी हुई कंपनियों के लिए एक बहुत बड़ी मुहिम आगे जाकर के भविष्य में आएगी और वो है इंश्योरिंग द अनइंश्योर्ड. एंड जिस प्रकार की हमारी जनसंख्या है और जिस मात्रा में हमारी जनसंख्या प्रतिशत जो है जीवन बीमा लिया है, मैं बात कर रहा हूँ प्योर टर्म इंश्योरेंस की. यूलिप वगैरह की तो मैं बात ही नहीं करूंगा क्योंकि मैं उसको प्रोडक्ट नहीं समझता. तो टर्म इंश्योरेंस के लिए बहुत बड़ी जगह है. 4 कंपनियों पर हमारी खरीदारी की राय है बुनियादी दर के आधार पर लंबी अवधि के लिए. SBI लाइफ, LIC, HDFC लाइफ और ICICI प्रूडेंशियल. लेकिन समय सीमा अनिवार्य होगा कि आप कम से कम 1.5 से 2 साल की समय सीमा रखें.
Got that view, Gaurang. Thanks so much for that. But next question coming in from M. Ahmed from Delhi. He's holding on to Bank of Baroda, bought at 280 rupees per share. Wants to know a 3-month view, Amit. And and he actually bought these shares at 280 3 months ago. Wants to know if he should continue to hold this counter for the next few months. Would you recommend that?
So his holding price and the current market price are more or less similar. My invalidation level on this would be about a break below 250. While the counter is strong, so hold on for targets of at least 310 in the near future.
Got it. Well, let's go across, take another caller from Hyderabad now. Narendra has a stock query for us. Narendra, good morning. Welcome to Ask Profit. What's your query?
Yeah, good morning, panel members. My name is Narendra from Hyderabad. Regarding this TD Power, I have the 80 quantity. Okay, so currently today I'm seeing that all power stocks are lost. So can I hold? I'm looking for the long term, this one. Can I hold or can I exit? What is happening power stocks? Can you explain me something?
Got it. Narendra, so definitely, stocks down almost 7.5% today. But Gaurang, I don't know if you have coverage on TD Power, but anything that you like in that space, because we've seen, consistent interest building in power ancillary companies, all of those. Any view that you have?
Well, extremely positive, Puneet, on the sector, including power generation, power transmission and distribution, and power equipments. The kind of capacity that the government has lined up by the year 2030 is huge. Almost about 300 to 350 gigawatts. 75% of that is going to be clean and green. And all these companies will tend to benefit, whether you are into power generation, whether you're into power transmission and distribution or power equipment. At TD Power, again, couple of years back, we used to have a coverage. Our targets were in place. Currently, we don't have a coverage. But we like the transmission and distribution along with power generation and power equipments. To name a few, Power Grid amongst the power transmission, Tata Power, NTPC, Torrent Power amongst power generation, modernized power equipments, names like ABB, Cummins, Hitachi Energy, and L&T.
Got that view, and Narendra, also there's nothing, at least in terms of exchange filing or news flow that's come in. Seems to be a market correction that we're seeing across names that have done well, but especially in the power space at this point of time. But go across to Vinay now, who's dialing in from Pune. Vinay, good morning. Welcome to the show. What's your query?
Yeah, good morning, and thanks again for taking my question. See, I have two questions. One is I have Divi's Laboratory bought at 4,200 at about 2 years before, and another one is TCS bought at 3,200 at 28 shares. So I would like to ask whether I should switch over from TCS to like NetWeb or Coforge, and similarly Divi's Lab, any other like Zydus Life Sciences or any other.
Well, Vinay, I can take only one stock query today at a time, so let me pick TCS.
Please.
Yes, okay.
Yeah.
And Gaurang, on TCS, he's bought shares at 3,200, so currently sitting on a loss. Do you feel that? What's your view essentially on the counter, and if that switch to Coforge or NetWeb makes sense?
So I think, Puneet, IT remains to be under pressure by default with the kind of sell-off we saw on IT-related companies, be it in the South Korean market or be it in US NASDAQ. Challenging times ahead. He got in at 3,200. Stock is currently trading at somewhere close to about 2,080, 2,100. First of all, hold on to it. We have a positive coverage, disclosure. If you have investable amount, Puneet, I would request the caller or investor to add maybe about 50% in case if he has, or maybe more in case if the investable amount is there from a long-term point of view. And if you allow me, one more pharma name if he wants to invest is Mankind Pharma.
Got that view. So hopefully, Vinay, that answers your question, and both those names that Gaurang spoke about as well. But next question coming in on Lumax Auto Tech. Now, Lokesh has bought shares at 1,734. So he bought it after a substantial run-up in that counter. Let's pull up the 1 year and the the long-term chart of 5 years as well, because from 2023 onwards, a massive re-rating was seen in this counter, up 37%. You see that almost 9x in 5 years. So from 2025 onwards, had a stellar jump as well. But Amit, his question being, he's currently sitting on losses of almost 10,000 rupees. Should he wait now? Is there a trend getting formed yet again to that 1,700 mark, or what would you recommend?
So Lumax, as you rightly said, it has been in a tearaway rally and has been trending in a upward sloping channel. Currently, it is trading at the lower end of this channel, which is a technical support. So I would suggest that you hold on to these levels. The invalidation level again comes below 1,400 levels. We should be able to see some sort of a recovery from here towards the 1,700 and 1,800 levels.
Okay, all right. The next one that we have is from Rajesh, who's writing us from Noida, asking about Tattva Chintan. He's got around 200 shares at the levels of 1365. He wants to know if he can average at the current levels, and he wants to hold it from a slightly long-term perspective. Amit, what would you recommend?
Yeah, it's actually not doing much. It has been in a consolidation range, and the invalidation level here is 1,100 rupees for targets of about 1,350. If it manages to close about 1,250, I would possibly be looking to enter into this stock.
Got that view. But next one coming in on Vedanta. Viewers holding shares at 296. And this is Jawar Babu. I don't know if he's got demerged entities also in his portfolio. But what would you recommend here, Gaurang, post the demerger? I think there's been a preference towards the aluminum business, but the others, of course, a very limited time frame, have been volatile. Any pick that you have, should he continue to hold the holding company or any other demerged entities that you like right now?
Well, so again, candid disclosure, we had positive coverage on Vedanta when it stood as a consolidated company with different businesses under its balance sheet. We had maintained our view that once the demerger happens, it will unlock value, and it has definitely unlocked value for investors. Currently, your question as far as the parent company, flagship company, Vedanta, we still have a positive coverage on Vedanta. So, and I think he must have gotten Puneet post-split because he got in at 280. Pre-split, I think the stock was at 700 plus levels.
Okay, all right. So that's the view coming on the entire Vedanta pack. The next one is from Biswajit, who's writing us from Kolkata. He wishes to buy Jindal Stainless for a year, which he says has corrected meaningfully. He's already holding JSW Steel 100 shares and Tata Steel for 500 shares. He wants to know if this is the right time to enter into something like this. Amit, would you recommend that?
I would not recommend that because Jindal Steel has not been doing much. It is in a consolidation range for them for nearly a year or so now. So I don't see any strong momentum. Even in this recent rally of metals, this has not participated. So I'm not particularly excited about Jindal Stainless.
Got it. Well, the next question coming in now, it's on stock that we get at least one query a day on, and that's on HDFC Bank. Now, a viewer is holding shares at 710 odd, and he's been holding on since pre-merger. He's mentioned. Wants to know, and this is Ram, and he wants to know, Gaurang, if he should continue to hold as well. Now, there is, of course, an obvious answer, but what are you looking at, Gaurang, in the next 1 to 3 years within the stock?
Honestly, Puneet, a lot has happened in terms of negative news flow over the last 3 to 4 months, and the stock has taken a knock on the chin. Absolutely, it was a knockout blow. At the valuation which HDFC Bank is trading currently looks extremely attractive. Again, a candid disclosure, we do have a positive coverage on HDFC Bank, and I think the management will take, and they have taken appropriate steps to straighten out things and to bring in more discipline. In terms of earnings visibility, I think the kind of credit demand that is going to come through is going to throw up a lot of opportunities for not only HDFC Bank, but most of the banks in terms of loan book growth. Interest rates remains a little bit sticky. I think the Honorable RBI Governor and the Monetary Policy Committee has taken a stance to wait and watch. Crude oil down, rupee strong. These are positivities, but monsoon plays a havoc in the immediate short to medium term. Wait and watch, and of course, continue to hold if you're a long-term investor. One thing I want to point is the investment is at a very attractive level.
Okay, all right. The next one that we have is on Garden Reach. Mahesh from Maharashtra has bought 292 shares at the levels of 3074 for a month and wants to know if he can continue to hold this or not. It's come down significantly, Amit, but what would you recommend?
I mean, again, the defense pack has been doing well, but the shippers are not doing well. They have been in a consolidation range for nearly a year. I would not recommend to add on to his loss-making trade. My invalidation level to exit the stock would be 2600 levels, and hopefully it consolidates here and moves towards 3200. But invalidation level is very clear, 2600 levels.
Got that view, Amit. But next question on Sign DLM. Viewer bought the shares at 468 odd rupees. So, the counter has been a laggard, and this is Birandeep. Let's look at the 1 year, 5 year chart as well, and you know what I'm talking about. But Gaurang, the earnings growth and the order book growth has been very volatile, right? I mean, you saw a recovery from the April lows, but if you pull up the 5 year chart also, the returns have been just about 9 to 10 odd %. Within the EMS space, do you think there are better picks, or should we still continue to hold Sign DLM?
We are positive on Sign DLM, and likewise, Puneet. I think the opportunity is now opening up for the entire EMS, chips, semiconductor, PCBs, whatever it is. Along with Sign DLM, we are positive on Amber Enterprises, positive on CG Power, and PG Electroplast. So again, a disclosure, long-term positive on Sign DLM.
Okay, all right. The next one that we have is coming in, and this is on Havells. Ashish from Delhi is holding 50 shares, bought at the levels of 1300. He says he can continue to hold this for the next 2 odd years. Wants to know if he can continue to hold, maybe average out for another 50 odd shares. Gaurang, would you recommend that?
Please go ahead and do that. I don't think you should wait. It's available at a decent level from the level where he got invested. Extremely positive on consumer durable white good appliances, and Havells is gaining market share.
Got that view. But the next question coming in now, it's on Bharat Dynamics. Our viewers holding shares, 65 of them at 1248, and this is Dilip from Kolkata. Wants to know the long-term investment outlook of this one. Gaurang, does it come in favor? Because it's another one which has not performed as expectations would have it. But any view on the stock now?
Allow me 30 seconds if you will, Puneet. to all your investors, if you eventually decide to invest in defense, don't look at 3 months, 6 months, 1 year, 2 year kind of time horizon. Have 3 year plus, probably 5 year time horizon. And that's because of the complexities involved in executing the order book, because the products that the manufacturer are high technology, high precision. They get an approval from a prototype and then the mass scale production starts. Having said that, we have coverage on BEL and Mazgaon docks. Amongst the private players, we are positive on L&T. Bharat, and this is not a recommendation, Puneet, just to benefit of your viewers, Bharat Dynamics, likewise BEML, likewise Garden Reach Shipbuilders, likewise Cochin Shipyard, likewise Hindustan Aeronautics Limited, Paras Defense. These are some of the strong players in the defense. But if you really want to make meaningful returns out of your investment, please have 3 to 5 year plus kind of time horizon.
Okay, all right. So that's the view coming in on the entire defense pack, and that makes sense what Gaurang just said. But we've got a caller waiting, but I think Kirtana is calling us from Hyderabad. Kirtana, a very good morning to you. Go ahead, ask your question. Hi, Kirtana, can you hear me? Okay, I think we seem to have lost the caller, but we do have her query. I think it's on Avanti Feeds. She's got around 350 odd shares that she'd bought it at the levels of 1275. She's sitting on a loss of over ₹1 lakh, and currently the stock is trading at 977. I think at this point of time, Amit, it's just for the sake of reiteration, right? It's very important for viewers to understand that if your stop loss hits, you exit, right? You should not make sure that it tanks to that level of over ₹1 lakh loss. But what would you recommend for something like an Avanti Feeds?
I mean, as a systems trader, it pains to see these kind of losses for our viewers and investors. I mean, from a technical standpoint, whenever you enter a stock, we have always been taught that there needs to be an entry, stop loss, and a target to go along with. It's not just one price. So the levels which they have entered, the invalidation of that has happened long back. It is currently, in a oversold territory. Probably, if since the loss is already magnified, probably you could hold on till it breaches 900 levels and hope that there is some sort of a recovery, purely from a technical standpoint that it is oversold. Otherwise, they should have gotten out of this stock a long back.
Right. Well, one of those tariff names, right? Because last year Focus got impacted when the tariffs were hit from the US. Once reduced, saw their massive run up. But as Amit highlighted, keep your stop losses in check as well. But when you look, let's go and start the second round of the rapid fire now. Amit as well as Gaurang, you know the drill. First question on JSW Infra. A viewer wants a 3 to 5 year view on the stock. Gaurang, is it good to hold for that long?
Well, one of the port logistic companies, I believe we had an IPO note, currently no coverage, but yeah, the sector looks quite positive.
The next is on Godrej Properties. Is this the right time to enter for the next 3 months, Amit?
There's some, let me just check the chart. It's not opening. Can I take the next chart?
Sure. The next one is on TFS. Our viewer wants to know if this is the right time to make an entry from a long-term perspective. Gaurang, any view by the time Godrej Properties is being pulled up?
So we are positive on Godrej Properties from a long-term point of view. TFS no coverage.
Okay, Amit, if you've managed to open the charts, any view on Godrej Properties?
Yeah, absolutely. 1600 happens to be the invalidation level, though it is in a consolidation range. If it breaks out about 1800, 1900 levels, then you could see targets of 2200.
Got that view, Amit. But next question on Shakti Pumps. Kaushik has bought these shares, but at elevated levels of 973. What would you recommend here, Gaurang?
Keep your stop losses in place. Don't let your capital go so much. No coverage.
Okay, the next one is on Samman Capital. 100 shares bought at the levels of 145. Our viewer Manoj Sharma wants to know in the near future if we can continue to hold this one or not. Amit, your view on the charts?
170 happens to be my invalidation level. It has seen a very sharp parabolic run-up. So right now in the consolidation range, but 170, if it breaches below that, get out.
Amit, also, if you have a view on Shakti Pumps, I think we spoke that to Gaurang, but on the charts, is there a revival expected or sideways momentum to continue?
I think Shakti Pumps is in a downward sloping trajectory. There is some attempt from 520 levels to move up. If it crosses, I would rather enter into a contra bet here if it crosses 600 levels.
Okay, the next one is on Gabriel India. 100 shares bought at the levels of 415. Thomas George from Chennai wants to know whether he can continue to hold this counter or not. Amit, your view on the charts for Gabriel India?
We had given a buy call on this few days back on your channel, and we have actually achieved the target. So if somebody had entered a little earlier at about 1100 levels, one should be looking to book profits.
Up 3x on that investment. So probably about the companies that got listed from outside. But Jerry from Pune wants to know if ITC Hotels is a good pick to invest now and for the next 2 years. Gaurang, seen a revival from 150 odd. What's your view on the stock now?
Positive on the sector. Hospitality, Puneet, ITC Hotels and like other hotels have got huge capex, like Indian hotels.
Okay. The next one is on Tata Elxsi. The average buying price is 6172, quantity is 23. Our viewer wants to know if he can go ahead and exit right now, considering that he's sitting on a loss, of course. Amit, what would you recommend?
Again, sideways to downward sloping movement. If it breaks 3900 levels, book your losses. I don't see too much of a hope here because technically it is a weak stock.
Amit, also on Swiggy, Srinivasulu has actually bought these shares at 420. Again, I think something that we spoke about, stop losses being hit and no exits. But would you recommend is there any revival scope of this one? What would be the strategy? Because he's holding 2,800 shares now.
I mean, from a revival strategy, if I were to look, I don't see any technical reversal happening as such. So I cannot even recommend to book out of the losses because it is such a magnified loss. So the call has to be of the investors, but I don't see any near-term hope for this.
Okay, the next one is on Kirloskar Bros. Ram from Hyderabad wants to know as to what should he do next. Hold, sell. His buying price is 2180. This entire pack has been doing very well. Amit, any view on the charts?
Yeah, we have seen very sharp recent run-up in the entire Kirloskar group. 2200 was a high it hit a couple of days back.
Right.
I do see that there is some revival here. One can continue to hold on if the entry prices, low at lower levels.
Right. Okay, that brings us to the end of this rapid fire round. Gaurang and Amit, thank you so much for taking out the time and helping us answer all those stock-related queries. Viewers, like I said, completely out of time, of course, on this edition of Ask Profit, but we will come in at 2 p.m. to take more queries. So do stay tuned, and of course, KYC is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where we get you all the buzzing stocks, mid cap, small cap, and is there any alpha to be made, and we do a detailed analysis and also the conversation with management. And today a very interesting company has come. It's a small cap, mid cap company, but before that, try to guess it, and it's buzzing all over the place. It's a distribution partner for tech brands. That's the first hint for you. And the second one, where a lot of news flow is coming, is the company will be acquiring 100% stake in VDA Info Solutions. Of course, you must be getting the answer by now. And company is backed by Madhu Kela's entity, almost 2.44% stake as well. And the stock has more than doubled from March lows. Okay, these are the hints. But the company in focus is Rashi Peripherals. This is the company which we are talking about. And the main question is the acquisition announcement which has come in. So we need to understand, the first question is, what does this synergy come up between a company like Rashi Peripherals and VDA Info Solutions? Also, we'll try to understand the timelines and the acquisition details as well, and how the funding will happen. Of course, a major part of the conversation will be on this big acquisition coming in. Stock has also run up, but other key questions are also there which we need to ask the management. And of course, this also includes the timelines for the management, and also look at the business model and the moat. Does that change right now? That's the big question to be asked. Growth and margin outlook ahead. Does it change the entire trajectory of the company? And looking at the expansion plans for the semiconductor business, couple of announcements were there, so we'll try to delve into this. Apart from this, also there is a demand shaping up in the AI related products. A lot of that has come up. Are they onboarding new clients in that segment? Also, we'll try to understand, is there any other acquisition or tie-ups expected as well? So quite a strategic conversation we'll be having with the company. And of course, these are the two spokespersons also from the company where we will be asking our queries. But let's try to understand, how does the business work? What is the moat of this business? Or is there something fundamentally changing or not? The company itself is a Mumbai-based company. It was incorporated in 1989, but it's a recent listing in February 14, 2024. Almost 2.5 to 3 years of history is there. They have information and communication technology, which we call it ICT, products and solutions. And largely we can say These are related to tech. There are services also. This includes pre-sale activities, solution design, and technical support. So this is just not products. Services is also something which the company does. Apart from this, let's look at the key details. The company is backed by Madhu Kela's entity, and that is pretty much a very strong point for the stock. A pan-India distribution infrastructure that spans roughly across 700 locations. So the core business model is on the distribution front. They have 55 branches, 50 service centers, and 71 warehouses. Apart from these numbers, they have certain segments, the verticals. This is of course your PC enterprise solutions and lifestyle and IT essential, two verticals where the company is actually working with. Almost 78 global brands have partnership, and more than 10,300 channel partners is there. So of course distribution is something which the company has the moat. That's what we are understanding. But this is pretty big. The VDA Info Solutions acquisition, that's roughly 550 crore valuation coming in. But we did a little bit of calculation. The deal comes in at a price to sales of 1.5 times. This is largely value accretive as per the street analysis. The acquisition will be funded by internal accruals. That means it will be funding from the company's book in the cash levels. So this is the overall picture of the acquisition, but the balance 3,300 will be acquired in tranches. That means a total 100% stake acquisition will take place up till August 2029. VDA is in the business of enterprise technology and digital solution space, and this is the entire picture. But the question remains is, synergy क्या है? इससे फायदा क्या होने वाला है? This is very much important. Do note it down. The full spectrum of enterprise technology value comes in. Deep tech experience, as we call it, that comes in from the company. The further expansion happens for Rashi Peripherals in the value chain. Now you understand there is a distribution at play, there is a tech expertise, both of them coming together with this acquisition. Already VDA is a partner to IBM, Dell, Broadcom, Cisco and Palo Alto Networks as well. These are the large names. So definitely they onboard also good clients. The distribution meets the technical enterprise, agar isko simplify kare to. So what are the FY26 numbers, the key factors to look at? They have stated that there is a rising demand coming in for the ICT products. Two other things which have been mentioned by the management. This includes the sustained tier 2 channel stocking. That is where we are seeing a lot of interest. And lastly, favorable pricing trends are coming in the key categories such as components and storage. But this was just the FY26 number. But let's try to understand the positive and the negative portion for this company. Video Info Solutions acquisition, this is giving a lot of synergies as we have discussed. That's one point. Secondly, the balance sheet is kind of strong as well. Of course, a little bit of borrowings is there on the higher side, but the net debt to equity ratio, that has come down. They are expanding into the semiconductor footprint. This is the Singapore and Indian arms. That's what we are trying to focus on. And the distribution expansion continues for the core business as they are moving towards new states and new locations. And also, what may not work for the company, this is the execution risk for the acquisition. Kya pata samay, the timeline can be there for the execution, might be delayed. Secondly, the core business model is very low margin, 2 to 3%, that's all. So whether this will become value accretive and the margin profile changes after this acquisition, that needs to be studied. There's a lack of analyst coverage also for this company, and because of that, we tend to get these companies in KYC. Valuations are not attractive because these stocks has already seen a massive run up. So this is the entire picture for Rashi Peripherals, but let's try to get inside the KYC ratings, where we'll judge this company. Of course, this includes income statement, balance sheet, cash flow, the return ratio, the usual numbers, but also we get in the shareholding pattern, how things have moved. There is, of course, astute investors invested in this stock, and also largely the valuations and the outlook and street cred. How much has the company made money for the investors? Let's start with income statement. And I had already mentioned you the growth is coming in the top line in the operational numbers. Look at the 3-year CAGR. That is where a good momentum is coming in. 19% up, 22% up. So there is a good amount of trading revenue also being included here. Let's just see the Q4 numbers, how things have panned out, and I'll also explain you the margins. Largely the numbers were even Stevens here. Little bit of profit also going up, almost 65% on a year-on-year basis. But my only concern in this entire business model is the margins front. The margins are almost single digit margins, and that's where a little bit of concern definitely comes in. But that is something which is the inherent nature of this business. But overall, the top line, the PAT, these numbers, CAGR is good. So it's a strong thumbs up for income statement. Balance sheet, let's have a look what's happening here. A little bit of concern for me comes in because of the elevated borrowing levels. याद रखिए इस धंधे में working capital ज़्यादा लगता है. That's why at times the numbers might look stretched, but this is the model for it. Almost 81 crores of cash on the books, and this will reduce as well because of the acquisition of VDA Info Solutions. So it's a neutral rating for the balance sheet. Let's come over and understand the cash flow segment. And of course, the cash flow will be impacted going ahead because of the acquisition which I had mentioned. But definitely there seems to be a little bit of positive momentum coming in and conversions in this business model. So net, it's a neutral rating for the cash flow segment. Return ratios, on the other hand, there seems to be a little bit of improvement coming in. It's largely a very stable ROC setup, but now this number are expected to come down because of the for this acquisition. But as of now, it's on the higher side, almost 16% coming in the ROC. Let's pull up the ROE numbers to show you what's the picture looking like. Of course, it was on the higher side at almost 19% in FY23, but then a little bit of downtick. But then now again this up move coming in, and that is why I've given this a strong thumbs up as well. But remember, for the future, the return ratios might show compression for FY27. Let's also talk about shareholding, what's happening here. Promoter stake, a minor up move has happened from 63% to almost, you could say, 64%. But look at the magic here. FIs and DIs, how things have moved. It's largely stable for FIs. DIs, on the other hand, have been increasing the stake from 14% to 17%. An astute investor, Madhu Kela's at entity, also has 2.4% stake. So I'm going to give this a strong thumbs up when it comes to the shareholding. Let's talk about the street cred. What happens here? And remember, the company is having a very limited history from 2024 onwards, where its IPO was there. From its IPO price, it's doubled, it's up 107%. But look at the magic. Now, March itself, the lows, the stock has more than doubled up as well. So overall, there's a very strong momentum in the stock, and I'm going to give this a thumbs up. But remember, if the stock has run up, the valuations would be under the question. The 3-year average, what I've taken, is currently at 23 times. And the trailing 12-month P ratio, that stands at roughly 18 times. The 3-year peak which was there, that was also, you could say, almost 23 times, and it's just a reversal happening in this. But net, the valuations are not attractive, so I'm going to give this a thumbs down. Also, let's talk about the outlook, what's happening here. And the street is bullish on this acquisition, but there are more details to it as well. We'll try to understand that. The focus is much more on the value addition product. Of course, a little bit of forward integration also comes in. Enterprise tech and digital infra, that is where the company wants to focus going ahead. And that's why this acquisition has taken place. The synergies are expected in the distribution and the deep tech enterprise. That's all we are looking at. So this is the outlook, and it's pretty much strong right now. But let's give you the entire picture, the KYC ratings for Rashi Peripherals, how it stands. Largely income statement, CAGR numbers were strong, but a little bit of concern for the balance sheet and the cash flow. The return ratios, the past numbers have shown a good up move. Shareholding is pretty strong because the DIs are increasing their stake. On the other hand, street cred, the stock has doubled up already from March lows, and that is why the valuations are not that attractive. Outlook seems strong. The final rating for the stock is roughly 6 out of 8, which we have given for Rashi Peripherals, and this is largely on the higher side of the average for this. But of course, on the other side, we'll be speaking with the management, Kapal Pansari and Rajesh Goenka from Rashi Peripherals. But time for a quick break. We'll be right back.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to KYC, and now we will be having a chat with the management of Rashi Peripherals, and of course the biggest news is their 100% acquisition of stake in VDA Info Solutions. Joining us, we are having Kapil Pansari. He's the managing director, and Rajesh Goenka, director and CEO of Rashi Peripherals. Gentlemen, good afternoon. It's always a pleasure to have you. We'll start with Mr. Pansari. Congratulations actually on this important acquisition coming in, but the way things are moving, why this acquisition has taken place, what's the total amount, and will it be funded by your internal accruals?
So thank you very much for inviting us on this on your show, Sharad. I think we are very excited about this acquisition. The prime reason for acquiring this is because the current momentum of digitization, infrastructure building in India on the IT side brings immense scope on value addition and bringing capabilities around it. And I think VDA acquisition brings a complete sweet spot to the synergies between the two organizations. And with a valuation of 550 crores, this entire transaction will be concluded in next 3 years with 67% at this point in time. And last but not the least, this continues to strengthen our enterprise portfolio as an organization.
Right, and I have a question for Mr. Goenka as well. Good afternoon, sir. So now the business model, does it change? Because of course your business model was in the ICT space. The margins, however, is very interesting. It's very single low digit numbers. Does that change? आपका धंधा क्या बदल जाता है? Is there a moat now at play?
So Sharad, first of all, let me compliment you for your fantastic KYC about Rashi Peripherals. I think you have done more due diligence about us than we have done. And I agree to your KYC except for the high company valuation. And there my reply to you and everyone is, this is just the beginning. So, yeah, on your question, I think first and foremost, both the organizations will run independently because the DNA and the strengths are different. However, we will co-work with each other to strengthen our offerings both in the channel and in the customer segment. If you really see, this is a very strategic, I use the specific word, strategic acquiring of VDA, primarily because they are into cloud technology, cyber security, data protection, server virtualization, storage, and they also provide IT consulting services. None of these products, solutions, and offerings is there in the current Arpitec portfolio. And we have been aspiring to develop these capabilities for last few years, and we have taken some initiatives as well. But obviously, starting from zero has its own pace. With this strategic acquiring of VDA, we are getting an opportunity to accelerate our capabilities in these 6 or 7 sunrise industry and segments.
Well, that's pretty interesting. But just to understand more, Mr. Pansari, now the growth and the margin outlooks, they change, right? Now all the benefits starts coming in. By when can we see that numbers, in the numbers? It's going to take 2 to 3 years. So maybe we can expect after 2 to 3 years, the entire, the revenue outlook or the margin outlook changes for your business on a consolidated level?
Yeah. So if we look at historically, the distribution ecosystem has very stable ecosystem and the number when it comes to the margin profile. With this acquisition, obviously, the value at the moment you do it going forward, it changes. It will have small changes, but in 2 to 3 years, definitely it should start showing meaningful directionally for the organization.
Well, that's pretty interesting. But apart from these acquisitions also, there is something brewing up in your semiconductor business or your growth strategy as well. A couple of arms are there, maybe in India and Singapore. So Street also wants to know what's happening in the semiconductor space. Rajesh, sir?
Yeah, so I think it's a good question. Semiconductor is the hottest topic in the world right now because, as power centers are going to be focused on semiconductor. Coincidentally, at Arpitec, we were one of the first to take this initiative about 5 years back on this semiconductor business. Today, we have a separate vertical within the organization along with a laboratory in Bangalore where we are doing a lot of prototype development. At this stage, we are doing multiple brand businesses, right from designing to concepts to prototyping. And to give you an idea, last year we grew about 50% in this business, and we had a revenue of approximately $15 to $20 million, which in the course of coming years is going to be extrapolated at a very rapid pace. And last but not the least, I also can add that these are relatively higher margin business. So apart from the technology and the strength that we get as a company, the increased margins also are an interesting fact to get into this business.
Right. And Kapil sir, I have a question for you, especially on the AI products, because in our everyday life, AI is becoming very much important. Data is becoming important. There is hardware, there is software. So what is in store for us when it comes to the AI products from your company?
So AI is going to be entrenched in every product in every segment of our lives, whether it is right from mobile phones, laptops, desktops, to security, CCTV cameras in our homes, to networking, to servers, to entire infrastructure. I think AI is eminent. Every product, every company, every individual will eventually start using AI in some form or the other. Think of it in this way: the way emails changed posts and communications, I think AI will change the way we use technology in a very different way going forward.
Right. And Rajesh sir, of course, this was a very big acquisition coming in and this will take time. But of course, your company has tie-ups with a lot of tech players as well. I just was wondering, from the first quarter or the second quarter, we can expect some large, strategic tie-ups coming in. And if yes, which are the sectors or the areas where it might be coming in? Rajesh sir?
So Sharad, on AI, I just want to add that Rashi Peripherals is very uniquely placed on providing technology AI solutions to consumer, SMB, enterprise, government, and large-scale AI data centers. We have proven case studies of supply, installation, and even warranty services across the segment. So therefore, Arpitec is very uniquely present in offering AI solutions. And we are also one of the leading distribution partners in India for AI solutions. So that's, I think, very big opportunity for you.
Right. And, please go ahead.
Yeah, and you were asking me something.
Sir, the question was on any other acquisition or tie-ups we can expect, in the last 3 months, in first quarter or second quarter, any large names getting onboarded?
So as I said, this is just the beginning. I think this is where I have to stop on this specific question.
Okay, fair enough. This is the beginning. A couple of times this has been stated. So whatever is publicly announced, that's definitely there. But just one final question, Kapil sir, I have it for you, is you have a good distribution network in India. Anything you're looking in Africa or Southeast Asia? Because this business model actually can be replicated other places also. So is there anything in the anvil or in the plans?
To answer this question, I think there's enough and more opportunity in India as a geography. While we do have offices and set up outside India, but they cater to mostly for supply chain economics for India as a geography. So our focus and energies will continue to be India as a region for the time being.
Okay, for the time being, India is a huge market for your industry and your business. Gentlemen, thank you very much for taking out your time for NDTV Profit and giving the views of this company, and best of luck ahead as well. It's pretty interesting conversation. Yeah. So that's the management of Rashi Peripherals. Everybody talking about their acquisition, change in the business model, and the management has stated one very important thing, that best is yet to come. Pretty interesting story, right? So for these interesting stories, stay tuned to KYC and also keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are